All right, everybody. Welcome to the session. Welcome, everybody. We're going to give it a few minutes for everybody to hop into the session. My name's Rodrigo. A couple shout outs here. We do have, who is this? Billow Tools. What's going on, New Jersey? We got Flores in the house. Jones, Peter, Ray. What's going on, Ray? Rod. All right, so we have a lot of this pack house, pretty much pack house. So in the chat, let me know when you guys are good to go. Basically, right now we're gonna wait here a little bit for everything to get set up here. In the meantime, folks, in the chat, put a 1 in the chat if you've been here. If this is your first time here, so put a 1 in the chat if you've never been in this session. Put a 2 in the chat if you've been in this session before, right? We're going to try to get to know the audience here before we start so we can, address the crowd better, right? So make sure you clock in that number there. We're going to review it with Matt. But basically, a quick recap, we will be going over trade ideas. We're going to be going over Google, Apple earnings right now. Amazon, Google, and Apple, right? With Chief Market Strategist Matt Maley. We're going to be going over that, the strategy that he has for volatile markets. He's been in Wall Street for about 40 years. Sector scoping. We're going to talk about options as well, specifically buying calls, buying puts, volatility trading, if you will, market discussions. So stick around, make sure to stick around until the end, because we will have a Q&A and a real-time view of Matt's private inner circle chat room, okay? So we typically do this live, but since COVID, we've decided to do it like virtually. It works out better for everybody. So again, we're going to run up a couple of polls here to kind of get to know the crowd here, who we're talking to and all that stuff. And you're going to be surprised by the results. So I think we do have Matt in the background. So let's go ahead and bring on the man of the hour, Chief Market Strategist at Miller Tabak, 40-year Wall Street veteran, Matt Maley. All right, I believe we do have Matt there in the back.
There we go. You all set there? Can you hear me and see me okay?
Yes, everything looks good there. Matt, so how's everything going there?
Well, it's been another wild week, and based on what we saw after the close here today with the saw and heard, after the close today, it's going to be another interesting one tomorrow. But, it's funny. We got some negative, I say negative, but there's somewhat negative earnings out of the big three technology companies that report tonight, and then again tomorrow morning we have the big employment report. So a lot of things going on. It's been a very volatile week, a very active week, and it's going to continue to be that way tomorrow and into next week when we get more earnings and then we get more CPI, et cetera. So it's been very active and exciting, and it's going to continue to be that way.
Right, and we have Captain Colt in the house. What's going on? Esken Plus, welcome. Hello from Vegas. All right, so we have a lot of ones here, Matt. So we have a lot of people here that are basically, watching this for the first time. So we're gonna run here the first a couple polls here for the folks. In the meantime, Matt, talk to us a little bit about the market, about what you're doing in this current market that you're seeing with these earnings and everything.
Yeah, and I'll just, what I'll do. Are you going to start with that first question for them to look at, or is that?
Yes. So, all right. So we're going to throw in a poll question there, and basically how you're trading. So we just sent out the poll. In the meantime, while we get the polls there settled in, Matt, talk to us a little bit about these earnings. What are you seeing? What could possibly happen in your opinion?
Yeah, one of these things, anything can happen. We see these earnings are all, the last I saw just before I got on here, all three stocks, Apple, Google, Alphabet, and Amazon were all trading lower. And I think in Amazon's case, it's considerably lower. Now, down anywhere from 3 to 6%. Now, all these stocks were very strong today, so that's not the biggest deal. And of course, they've seen big rallies over the last last couple of weeks, and especially over the last couple of days, including today. Well, after the Meta, the old Facebook reported good earnings or better than expected earnings yesterday or last night, and then of course we had the Fed meeting with the Fed Chairman Powell being a little bit more, what do you call it, little bit more dovish than he had been in the past. So, but the thing everybody's going to be looking at tomorrow is what happens, because we saw some negative news out of Microsoft just 2 weeks ago, and the stock opened lower, the whole market opened lower, and within the first hour of trading, everything bottomed and rallied back strongly. A lot of people are really expecting that. We heard about it in the financial press as they were reporting these earnings. We're asking, hey, is this going to be another one of these things where just like Microsoft, the stocks open down and they bounce back and everything's hunky-dory? That may indeed happen, and that's why we have to stay very, very nimble. That's why working in these chat rooms are chat room like ours is a great one, because it keeps you well grounded. You're not trading alone. But the thing is, if we get the problem is the stock market, or at least the NASDAQ, which is the NDX 100, which is what all three stocks are in, the index that it's in. We look at the QQQ, which is the ETF for the NASDAQ 100. The QQQ is up 8% since Microsoft reported, and and of course it's rallied even more than that since the beginning of the year, up about 12%. So it's starting to get a little extended, and I'll show you later on when we get to look at some of the charts. We'll show you how the QQQ is getting overbought. And so it looks like we're going to be, but we got to wait to see how the reaction is, because I'm not sure we're going to get the same kind of reaction we got when Microsoft reported.
Right. No, and the market today, it's always changing. That's really why you always have to have that, that mentality. So, all right, Matt, so we got some votes here for the polls, right? So are you trading alone? So it looks like I'm going to share the results there with you. I don't know if y'all can see that. Basically about 90% of the people here are trading by themselves. And Matt, you've been director of trading at Merrill Lynch. You've been in Salomon Brothers, like legendary spots, including, Miller Tabak, where you're the chief market strategist. So you've seen the operation in action, basically, right? So
right. The one thing, if there's anything that I can get across today, and whether it's be with us or with some other chat room, of course, I think we're good, the best. But it's the whole point is that, well, first of all, my background is in trading. I'm a strategist. You probably see me on CNBC or Bloomberg. I've been on Bloomberg, CNBC 600 times or something. It's great, and I enjoy doing those interviews. But the point is that even though I'm a strategist, unlike most strategists who were former economists or analysts, I'm a former trader. I spent 25 years, as Rodrigo said, 15 years at Salomon Brothers, 10 years at Merrill Lynch. And on those, and those who are not familiar with Salomon Brothers, back in the day, in the 70s, 80s, and 90s, it was the most important trading desk on Wall Street, and by a long shot, actually. And I wasn't there in the 70s, but I was there for part of the 80s and into the 90s, 15 years. And then Merrill Lynch was also one of the most important trading desks and the biggest one on Wall Street. And so for 25 years, I covered the biggest institutional trading desks in the business. So I really learned about trading, not what theoretically should happen down the road, but what's going to happen not only 3 years from now, but 6 months from now, 6 weeks from now, 6 days from now, and in some cases 3 or 4 hours. And again, I talked to the biggest mutual fund for years in the world. I talked to the biggest hedge fund for years in the world, BlackRock, major insurance companies, major money managers, pension fund managers, banks, etc. And you really learn how to trade and how what's really going to happen, not what should happen. Because as I always say, the market is not always right. I know they try to tell you that in the financial press. That's not the case. The market is only always right eventually. And so when you're trading on a short-term basis, you can't, when I was trading with those accounts, we're not worried about what's going on 3 months from now. We're worried about what's going to happen over the near term. And that's, if you're going to be an active trader, is a great way to enhance your returns. But the most important thing, again, going back to my initial comment, trading alone. I covered all those trading desks. Those trading desks were huge. Okay, in some cases, they had 20 traders or more. You think all those big, really, really good hedge funds, none of them are trading alone. Some of the big hedge funds actually only have a small number of traders, but they don't have a trader trading by himself. They have several traders. And guess what? You know how many times Morgan Stanley calls them every day? Many times a day. Merrill Lynch several times a day. Goldman Sachs several times a day. They have all these brokers. They don't have just one broker. They've got 40, 50, 60 or more brokers calling them every single day, keeping them up. Have you seen this? Have you noticed that? Have you heard this news? Did you see this breakout in the stock? if those guys at the biggest hedge funds in the world are not trading alone, how in the world are you going to be able to do it on your own? So that's what we try to do in this chat room is point out things that are going on and also be educational too. It's one thing that we're really trying to refocus on as well, is really talk about, what's going on and why. And I think that's one of the things that you'll hear from the people who are in the chat room right now that I've been very helpful with. And
Right.
So it's that's again, trading alone is so hard for pros. It's just something you should try to avoid on your own.
Right. So we launched another poll here for the folks. Oops, sorry. Launched another poll here. Basically, what their goal is for trading. So in the meantime, Matt, while you were talking about why trading alone is not ideal, right? For retail traders, especially in this situation. So in this case, okay, it looks like we already got a lot of these. So I'm going to share this with you. So there's three options. What is your goal for trading? So we had retirement, long-term growth, and cash flow. So I guess most of the people kind of understand, and it looks like they're here for the right reason here. Now, maybe you can show them a little bit how you use your strategy, Matt, here to generate cash flow here with the folks.
Yeah, again, we all have well, if you want to be an active trader, you should still have two buckets, right? You still want to have that long term, that bucket of money that's long term, and you are thinking about that 2, 3, 5, 10 year, in some case 30-year time horizon, and that's fine. And you should have money in there. But the one thing last year was a year where a lot of people lost a lot of money. We made money in the chat room, and it's just we didn't just outperform; we made money. And so when you're an active trader, that's again, I think it's good that you're looking for that cash flow, because you can instead of we're not looking in this part of the portfolio, this sliver of the portfolio, and for me, for some people it's a large sliver, for some people it's small, whatever you choose. But we try to do it in a way that again gives you that cash flow, so you can make the profits quickly, and also manage the losses. Try to get out of those losses as quickly as possible. And you just you don't want to blow up the account. That's just a tough thing to do. And I've said many times, I very, very rarely, but I put more than 10% of my trading account into one position. It's just too much risk expense. But we use a lot in the options. So even with these smaller trades, you can really really maximize. You can get some great returns, and I'll show you some of the returns we've gotten in the hundreds. I mean, we made over 100% on Rivian puts this past week. The other thing we had today was Carvana. We'll see what happens tomorrow morning. But when Carvana was trading up at 19, I'm sorry, it was about 18. We bought some puts on Carvana, well, anyway, the Carvana, the kind of the Amazon for cars. Well, the stock, it was trading about 18 when we bought them. We added some a little bit later. I mean, the stock after the market close today was trading below $13. We're going to make some nice money on those. But those puts weren't expensive. Were expensive, and we usually don't go for those big expensive ones. But I just knew it's like this company. I don't say this company's gone out of business, but this company is in big trouble. It was trading at $7 on Friday. It closed at $7 on Friday, and that was up 50% on the week. And now it traded up to 18. I don't care how good the Fed is going to be, how dovish the Fed is going to be. I don't care how good these earnings were going to be, and they turned out to be poor tonight. Carvana is not an $18 stock. It was like shooting fish in a barrel. And so we're going to make a real nice profit there. And that's what we're looking to do. Sometimes it'll be over a couple of days. Sometimes it may be over a couple of weeks. But they are short-term, and sometimes just a few hours. There are several day traders in the chat room who would basically go home flat every night. But the point is, we're trying to trade in an active manner, in a responsible manner, and get some of these get the kind of returns that we can really take advantage of. I said 100%, it was 180%. I'm sorry, on the Rivian puts. It was funny because on Rivian, I said, hey, listen, these Rivian puts are up so much, I'm going to take a profit. They're up 100%. I'm going to take a profit right here. And then I got caught in something else. By the time it was like less than 5 minutes later, I was like, oh my God, I forgot to take the profit. I took the profit. They went from up 100% to up 180%. It was crazy. But you got to be careful with that. You really do have to when you want to do a trade, something that's that liquid, you can't get distracted. I do sometimes because I'm doing a lot of different things and I'm trying to help people. Where you're just doing your own trading, you won't, less likely to get distracted, because sometimes, of course, it could move against you. But anyway, I just think that's the right way to look at things. You want to be looking at the cash flow type thing. And again, for that part of the portfolio, you have the longer term portfolio. I mean, I've been talking about Google, and the stock is down now today, but I've been talking about it all summer long. When the stock was down flat on its back, I was saying, let's buy a little bit each time. But that was for the big, each month, let's buy, add a little bit more, add a little bit more. And by the time next summer comes around, you're gonna have a nice little position in the stock. But that was for the big portfolio. That wasn't for this chat room. Although I do talk about those things in the chat room all the time when people ask me about, hey, this long-term potential for certain stocks. And we do that, like I said, all the time. But for the picks that we make, they usually tend to be much more short-term oriented, and for that cash flow part of your investment horizon.
Right. So in the meantime, we threw out another poll there for the folks on their account. Now, this is interesting, right? So this is, I mean, risk management as well. So that's good. And yes, they are available on push notifications, Michael. Matt, so in regards to CPI inflation, do you think, I mean, what is your opinion overall on the topic right now, and what the Fed needs to do?
Well, one of the things that it's really, it's kind of I hate to say, but it's almost like a lose-lose situation, because if inflation is going to come down in a big way, that means the economy's going to get a lot worse. And I'm not so sure that's going to, I'm more worried about stagflation still. Nobody's talking about that anymore. They were all talking about it several months ago, but it's kind of fallen by the wayside. But, and I'll show you this chart later on, but the commodity prices have not gone down in 4 months. If anything, they've gone up just a little bit. Now, again, but they've stabilized. Inflation, all these numbers are coming in, but now that, we got copper up, lumber's skyrocketed. Oil is up 20%. Even though it's well below its highs, all these well below highs. But my point is that inflation I think is very likely to stabilize at a higher level than people are assuming right now, and certainly more higher than the market is pricing in. And if I'm wrong, well, that's not bullish, because if it's really going to come down hard, that means the economy is going to come down hard. That would be okay if the stock market was cheap and was pricing in a recession, or pricing in something more than a soft landing. But it's not. And right now we're at 19, almost 19 and a half times earnings, 19.2. That was even before the close. So the 19.2 times earnings, history tells us those kind of valuations can only exist like they did in 2020, 2021, back in 98, 99, and early 2000, when there's massive amounts of liquidity being provided in the system. That's not what's happening now. The market is pricing that a pause is a pivot. They're not pivoting. And history shows the market never, I say pretty much never, bounces back until the Fed actually starts cutting rates. And my point is, if they're going to hold off from cutting rates until you get until inflation really comes down, which means the economy is coming down, which means earnings are going to come down even further, the stock market is going to have to fall as well. So I guess my point is, don't look for the Fed to cut rates until after the markets calm down, because guess what? That's what it has always done every single time since World War II. And maybe before World War II as well. I've only gone back and looked at all the bear markets, but every bear market since World War II has stopped with the stock market dropping to below 15 times earnings, somewhere between 9 and 14 times earnings. Jim Chanos was asked about that this week on TV. And he just said, he didn't want to flat out say, because he's not a market guy. He's a short seller, and he tends to try to be market neutral. He knows individual stocks, but he wasn't being bullish when he said that, this has never happened before. And basically what he was. Some people kind of took it as like, well, he's saying it's never happened before. It's good. It's like, well, no. Well, I saw the interview, and he was saying this has never happened before. It's probably not going to happen again. So therefore, it's probably not going to happen again. The market's going to have to get cheaper again, and it's not going to happen overnight. But we're going to have a lot more volatility along here, and I do think that CPI number, again, and I'll show you the chart in a few minutes on the CRB commodity index. It's actually been trading sideways since September. So yes, those numbers that would go along, those CPI numbers that have been going along but they're measuring what happened earlier. As they start to get the numbers from more recent times, those numbers are not going to fall like they have been. And then besides, year-over-year numbers, okay, that's great because, you know, if year-over-year fill my gas tank costs the same as it did last year, that's great, but it's still a hell of a lot more than it was 2 years ago, and my pay hasn't gone up that much. You know, I've got a son who's you know, in his 20s. He rented a new place. His rent is higher than it was, and guess what? You know, he's still getting paid. He got paid a little bit more, but the rent's gone way up. You know, so even though his rent is going to be even with last year, next year he's going to say, "Yeah, hey, great, guess what? The percentage I'm paying on my rent is the same as last year, but it's a hell of a lot more what it was in a couple of years than it was 2 years ago, and I'm not making a hell of a lot more than I was 2 years ago." See what I'm saying? It's just some of the things is a little distorted. So we're going to have a lot more volatility in these CPI numbers in the months ahead.
Right. So, all right. So we got some of the polls back here, and I mean, you could take a guess here, but basically, yeah, we asked the folks here on the Zoom if they've ever blown up one or more accounts. I'm going to share the results here with everybody, so you can see it's about 45%. So this is a very common occurrence, Matt. You've been you've been trading. I mean, you've been in the game for 40 years. Maybe if you want to, maybe it's a good time to share your chart on your Bloomberg and kind of show them some of the things that, you know, a little bit of education of really what has helped you as well to avoid these kinds of things and things like that, things that you practice in the chat room. Okay. Things that you practice in the chat room with your members.
Right. So let me just pull up this thing. I hope you can see my, oops. Hold on 1 second. I didn't have the chart I wanted to bring up, but it'll only take me 2 seconds to pull it up. Hold on. What am I doing here? There we go.
Yeah, and the last poll here I got is if anybody options position. So if anybody does have an open options trade, we'll see how many people have options trades right now open, and maybe we can review some of the trades you guys have at the end.
That'd be great.
You know, that'd be awesome. All right, let's do it.
Hold on 1 second. Okay, there you're doing that. I'm just trying to get my thing up. Hold on, I'll let you guys do that. Just takes me a second here. Sorry, I meant to have that up before we even started, but it just takes a second or two for this to filter through. Not sure why. Maybe it's me. Oh, here we go. Okay. But just to talk about what Rodrigo was talking about is it blowing up an account? And as I said a little bit earlier, the one thing we definitely want to avoid is putting too much of a position in any one trade, too much money into any one trade, too much of a percentage of your holdings in any one trade. And people said, "Geez, I blew up my whole half of my account on one trade." I'm like, "Whoa, you know, because you're in options, you know, options can go to zero." Boy, again, like I said, I try to go to a. I definitely. Try to stay with the, hold on here a second. Great, I just want to make sure I had that. Okay, yeah, I don't go to any more than 10% of my portfolio at any given time, and in any one trade, or in any one, you know, sometimes you have related trades. You know, you say, well, geez, I've got a bunch of calls in Microsoft, and I'm also along the QQQ calls, and I'm also along Apple calls. Well, that's basically all the same trade for all practical purposes. So you don't want too much of that in one big thing. So that's one thing that we try to do. Number one. Number two is, you know, we set stop levels out. Now, if you're trading a stock by itself, always, you never want to lose more than 10%. Sometimes you can give yourself a little leeway to 11%, but that's it. If you have a trade and you're trading in an active manner, and you want to, you know, hold it for a couple of weeks or even for a couple of days, and it's just it's a regular stock, not an option, 10%. It goes down 10%, get out. No matter what, you can get back in a couple of days later. You've just, and you might be absolutely right about the trade. Don't double down. Don't double down. If you buy something at 40 and it goes to 30 and you double down, your average price is 35 and it's trading at 30. Now you're relying on hope to get back to even. Get out of the trade and find another time. And what we try to do in the chat room, again, my trading expertise after 40 years. I mean, yes, I use fundamentals very important, carefully, but we also use positioning. We also use sentiment. We use technical analysis very heavily to tell us that this is, you know, hey, that was a bad entry point, didn't work out, thought it was going to be for a lot of different reasons, but look at this. Now it's much more compelling. And it may be 2 days later, it may be 2 weeks later, And sometimes you're just like, nope, I was just wrong, and you walk away. But you got to cut your losses. Jeffrey Gundlach, and he's a bond guy, but he's one of the most successful bond hedge fund guys in the business. And he was saying yesterday, one of the most important things to do is to learn to take your losses and move on. You can't hold on. You can't hold on to those losses. And if you're and if you don't buy as much as you thought, it's okay to pay up. Don't be afraid. Let's say a stock's going higher and you've already bought a bunch. Don't be afraid to pay up for more if you think it's going a lot higher. And the same thing, you might be buying puts. The stock's going down, and so the put's going up. Well, you can buy even more. It's okay. We do that all the time, and especially on the sell side. We, if we get an option that goes up 100%, which we do most weeks, we'll get something that goes up over 100%, and we'll sell half. That's great. So now, no lose situation. If the option goes back down, well, I've sold half. Obviously, if you've doubled your money, that means if you put in $100, now it's worth 200, and you sell half of it. Okay, the $100 you put in is safe. Now you're playing with just gravy. And now you can play around with it, let it ride, and you feel more comfortable at letting it ride. Because, geez, now it's up 300%. What do I do? Well, it's like, something I can afford to let it ride a little bit more. Maybe I'll sell a little bit and hold on to more. That type of thing. You just have so much more confidence. And so that's kind of, it's just risk management is an important thing. Now, when it comes to the options, we try to keep it to 25%, and then you just get out, move out. But my point is that if when you're going into a trade, don't be afraid to buy it at a couple different levels. When I said, hey, if you buy it here and then buy it down 10%, no, we don't want to do that. But it's okay if you buy it at one level and you buy it a little bit lower, a couple, 10, 20% cents lower, and then buy a little bit low. Okay, fine. But then, but once you've got your position, you've got that average price. Once it gets down 20% on an options, get out. Okay. But you can play around with it. And that's another thing with risk management. You do it all at once. It's like, oh my God, you've got to be so right. I'm going to buy it all at this one point. That it's just hard to be that perfect, but you got that, kind of leeway in a certain time frame, over the next 20 minutes or maybe the next hour, I'm going to buy a little bit here, a little bit there. What I did today, at the end of the day, I bought some TQQ puts. I just thought the market was getting out of control. I bought some very near the top of the day. So in other words, a real good play there. Wish I had bought more, but I'm not going to beat myself up over it because there was so much upside momentum. God knows how far it would have gone. And then as it came down and then the put moved up a little bit more, I didn't mind paying more. And I bought a little bit more at the very end of the day. And so now, at least the way things are looking, those things are going to be a nice profitable trade because I kind of eased into it rather than trying to pick the exact level. Oh my God, it's so hard to do. So that's where it really comes down. We're trying to avoid blowing up your account. I didn't get too ingrained there, Rodrigo. But
no, that's fine. So right. And that FXI trade, obviously, in case y'all didn't know, is the actual record at Benzinga for the biggest P&L gain. I think it was like what, 8,000%, something like that.
Yeah, it was here, and we'll just go to talk a little about how we went through this. And again, I always do this. I've got to just change the chart, but this is the chart from March of last year. It says last weekend's chart. Well, it was last weekend's chart when I made it in March of last year, but it was, see how China, the FXI, which is the large cap ETF for China stocks. And so it had been selling off all year long. I've been negative. The Chinese government was just hammering all their different industries. Every month they come out and slam another industry. Well, the group got that kept going down. And then finally, we hammered it. Not their government. Our government came in and said, hey, we're thinking about delisting some of your names. And so they're like, hey, I knew China wasn't going to put up with that anymore. It's like, wait a minute, if one thing for us to knock down our stock market, we don't want you knocking down the stock market. So what we did using technical analysis, again, this is what's called a relative strength index, the RSI chart, and it tells you when stocks get overbought and oversold and give you an idea of when it gets overbought and oversold. See, when it gets down to this green line down at the 30 level, that's a green line because it says go ahead and buy. When it gets up to the red line at 70, that's stop, don't buy anymore, and even sell. And you can just look at how they correspond here. That was a top there. See how it got oversold even below that green line. See how that was a great buying opportunity. Down here, that was a great buying opportunity, et cetera. Well, look what happened here after this big announcement on the thing. The market got, this is the most oversold I've seen a relative strength index, an RSI chart ever, second most ever. And I was like, So I use my experience. I'm using technical analysis and my experience to know that I know China, I know that government, I know what they're going to do, I know what they've done in the past. They're going to push the market back up, and they're not going to push it up for. It's not like a beam stock where it pushes back up for 2 days and goes back down again. I mean, they're going to buy it and hold on to it and force it up, because they're just going to. They'll do whatever it takes. They'll just the government will buy the shares themselves if that's what they have to do. Well, hold on one second. Oops. Got frozen there. Okay, here we go. Sure enough, the next day, huge rally. Their market rallies 27% in a day. It's like, the Dow Jones Industrial Average trading 27%. And so we saw that huge rally. This is true the second day, but you can see it actually was that up that much the next day as well. And this is what we had done on the 15th. We had came in and we bought. It was the 15th. We bought the March 15th. We bought the FXI. March 18th. That was March 18th. Is not the trade date. Trade date was the 15th, as you can see down here. But March 18th was the expiration date. The strike price was $30. And of course, it was a call option. We always say whether it's a call or a put. We gave a specific trade, not just, hey, you ought to buy some China stocks. We gave a specific trade. Sure enough, it opened up 1,000%. And usually something's up 1,000%. I'm like, time to pull the plug. Let's go. Let's get out. That's we don't want to be greedy. But I knew that Chinese government would keep buying, so we stayed with it. But an hour and a half into the day, I was like, oh my gosh, these things are up 3,000%. We got to take some profits, but we didn't sell all of them. Sold half, up just under 3,000%. Then we held on them for the rest of the day. And even then, at the end of the day, I said, because I think the Chinese government's going to buy this, hold it up for at least a few days. They're probably going higher, but I can't take that chance. I'm going to take them here. It was almost 8,000%. We sold the other half right at the close. So when we combine the both, it was over 5,000%. But I did tell some people, I said, if you want to go ahead and hold on, I'm not going to go ahead and hold on. Some people did, and they made over 10,000%. At least that's what they said. I can't take credit for that part of it. But again, this is not something that happens every day, but we have done a lot of trades like this. In April, this is the SQQQ, which is the inverse ETF on the QQQs, but it's also the leveraged ETF. And we just, there's another one. This is a QQQ. We do trade on the VIX. There's 82% over several days. We did that in May. It's more, I just want to try to get something away from the QQQs, but you can see here the QQQ, 71%. Here it's 78%. Some of them are really big, some not so much. But let me just go here. Apple. Here we made 400% in Apple calls. But again, we try to use different strategy. A lot of people are like, oh, I just want to buy the meme stocks or the most. Apple's obviously a very popular stock. But why did I choose to buy the Apple calls on this? Well, I knew it was being used. This was right in May of last year, in the middle of one of the crashes in the cryptocurrency market. And these guys were getting margin calls, and the cryptocurrency market was not liquid enough for them to raise enough money to meet their margin calls. So they sold stocks, and I saw that. I said, I tell people in chat, look, Apple, people, I mean, they don't own General Motors or General Electric. Okay, these are tech type people, and if they're not in Bitcoin, they own tech stocks. And look what's happened. Apple is down 10% for no reason whatsoever. There's no news out. The market overall was going down, yes, but there was no news out. So I said, I think what's going on here is they're using Apple. They're selling Apple because it's liquid and they own it, and they can use that to raise money to meet their margin calls. Sure enough, when I saw that the cryptocurrency had bottomed, I said, hey, if the cryptocurrency's bottomed, Apple's going to bottom too. It's going to see a big bounce. Sure enough, we went in and bought the Apple, May 13th, $143 calls. Again, we made over 400% in just a day. Now they went higher. I didn't get the exact bottom. Didn't get the exact top. People might be mad. If you get mad that you didn't make 500, that you only made 400%, not 500%, you should not be doing this. You will drive yourself absolutely bonkers. There was another trade we did in Viacom. Again, we used technical analysis, and we made, again, it was something where we sold the first half up 2,500%, and the second one up to 5,000%. Here's another one, Amazon calls. Now, here's a great example of one where I didn't even get involved in the trade. The people asked me, said, hey, one of the people in the room said, Amazon calls, they're going to split. And every time, just before the stock splits, they'd already announced the stock split. Every time the stock splits, the stock rallies. And I looked at it and I said, that looks like a great trade, but I had too much of my positions kind of in some tech stocks. I said, I'm not going to do that. You guys go ahead. I like it for a number of different reasons, including the ones
Right.
and all the reasons they said. Again, so they sold half of it up 500%, up 1,500%. But we do on AMD, a specific stock, did the same thing in XLE, which is an energy ETF, options on ETF. You can see over 400%, over 500%, and we've been doing it. Wheat, we did on the ETF for wheat. It's not. I'm not a bad speller.
Mm-hmm.
That's the symbol for the wheat ETF. And just showing that through different months, we've been able to do it. Here in August, we made 800% on some LABU, which is the ETF for the biotech, leveraged biotech ETF, et cetera, et cetera. So I don't mean to belabor the point, but the point is we do it in a lot of different things. And the biggest thing that we know now, and I should have said at this beginning, I'm sorry, we're talking about trading alone, but now we have the tools. All right. So many people, for years, only the big shots, only the big hedge funds and stuff could trade stuff like this. And otherwise, if you wanted to make, Apple, let's say, geez, I think Apple's going down, so I'm going to go and buy some Apple puts, or maybe I'm going to buy Apple calls, whatever happens to be. Well, that would have been great. The problem is that you would have had to go out and bought the March puts. Okay, that's expensive because that goes out 2 months. And that time value, those market makers, they're putting on a lot of risk to sell you an option going out 2 months. So you're going to spend a lot of money. Now you can buy the weekly options with just a couple of days. The market makers have less risk, so they're going to charge you less. And it's much more profitable to do that. So they have weekly calls on all these things instead of once, literally 4 times a year. Now you have them 52 times a year. Okay. And then for the index options like the QQQ or the SPY, we have those every single day. So you're not paying those big time premiums. So the tools, and then plus we have, of course, all the ETFs, the inverse ETFs, the leveraged ETFs. Not all of them are liquid, and we stay away from the ones that aren't. But the ones that are, we can, we've been able to profit really well from. So the tools are there that we didn't have in the past, so we can take advantage of this volatility right now.
Right. So yeah, we're getting a lot of questions here. Something in regards to the checkout. But yes, folks, that's the link. So, all right. So there's a lot of questions here about the chat room, Matt. Let me go over some of these questions here, then we can get back into it. I know we have a lot to cover here about the markets, and we still have that other poll out. So let me just pull this up really quick. But yes, folks, that is the link, Dorothy. That's the link that you would have to use, the one that we posted. And let me just pull up these questions. All right, folks. So does Matt Maley go over the member trade ideas? Yes, he does. We will actually be going over a live trade from somebody here in this room today, right before we wrap it up here. But
that's good. Yes,
we will be doing that here in the live. Are the sessions on so we Matt does the sessions on Tuesday. They are recorded, so everybody that it's from 11:30 till about 12:30 in that range, and starts at 11:30 though. So basically, you'll be there with Matt. It's a private chat member meeting that you'll have access to, where you will get a full market analysis, a full market update, trading adjustments that are happening, why those trading adjustments are being made. So there's also like
educational stuff, right?
There's a lot of education, but it's like education that you'll actually use, like not garbage that just uses space, right? So you'll get that.
Exactly.
Good question. What is the chat room schedule? So the blue chat room, the one we were showing you, it's open 24/7. We do have a unique global community. You'll see people from all over the world in this live room. So that is open all day, but Matt is there Monday to Friday from about 8:30 a.m. till about 5 p.m. So before the open and even after the close. All right. So he's updating everything, entries, exits, and you do get the push notification sent to your phone. Right. Let's see. Next question. Does Matt provide education? Yes, he does it throughout the trades, and also in the Tuesday session, he does it based on, whatever the folks in the chat room want. What are the chat room notifications for the trades? So those are the push notifications, Michael. So you just download the Benzinga app, and then you log in with your credentials, and then you're all good. You're going to get those push notifications as a mobile alert. Doesn't matter where you are, at work, in the garden, in the kitchen, doesn't matter. You'll get that alert, and other breaking news. Okay, so and last question here. How much capital is required to do the trades in the chat room? So these contracts are actually they're like $80 you would spend for one, basically, for one lot. So these are 80 cents, 70 cents. these are very short. These are near short term calls and puts. So there's a few more questions that came in here to via the Zoom, and we're just going to go through this really quick. MJ, what's the difference between? Okay, yeah. So the full access basically has everything. Okay, but we don't do the that other package, MJ. We only do the first one you mentioned. Does Matt run a daily trading session, and for how long? Nicholas, the live trading session is Monday to Friday. Matt is there from 8:30 to 5 p.m. So before the open and after the close, and everything in between. You're there talking with Matt, getting his trade ideas, talking with the community. There's hundreds of people there as well. So yes, it's the entire day. Beth, are you using Eastern time zone? Yes. This is all, well, my computer thinks I'm in California, but the times that I'm using is in Eastern. Yes, 8:30 a.m. Eastern till 5 p.m. Eastern. What time frame? Okay, we're going to get into that later, Naji. What does it take to get in the chat room? All you have to do is click that link and you can sign up there. KL, Josh. All right, so we're gonna put the link there so that we can just TD Haynes, send me an email. Send me an email, folks. We do have to carry on here with the session. I know you guys have questions. Trust me, we'll talk again. We have a live Q&A at the end. All right, but okay. And if you have questions, just put them in the chat. Now, Mr. Matt. So we put out a poll that we were asking the folks if they currently have any open options trades. So I'm going to share the results there with you. So we have, 56% of the people watching here have an open trade in options. So I'm going to ask you folks to share your trade. Okay. Give me an expiration date. Give me a strike price. Give me a ticker symbol. If it's a call or a put or a spread. And well, but keep in mind, it preferably calls and puts, because that's what we trade in the chat room. We're buying calls, we're buying puts. That's the most simple type of options trade that you can make. You're not doing anything complicated. It's just like buying the stock, like, you buy it and you sell it to close. So put, if you have a call or a put, right, on a stock, put it in the chat. In the meantime, Matt, what you had, all right, okay, so we already got several here, Matt. So we got Roku 64 from Nicholas. Roku $64 call, paid $7.20. Nicholas, when does it expire? February 24th. So you bought a call today on Roku that expires on February 24th at the $64 strike price. So let's just take a look at this like you normally would if someone asks you something there in the chat room, Matt.
Okay, I'm just going to pull up, see to look where it's trading in the aftermarket area. It's trading, it's down. Okay, yeah. Again, this anything I quote you right now is in the aftermarket. It could change a gazillion times between now and tomorrow morning. But with the with some of those earnings coming out in the NASDAQ area, it's affecting all the names. And Roku is down about 1.5%, trading at 64.50. Now, again, that could change. That could be at 68 tomorrow. It could be, whatever. So I don't want to point out that it had a real nice rally today, up 9%. But I just wanted to let you know that. Now, before I do that, I just also want to mention that at 5:30, so about 10 minutes ago, the Apple conference call started. Now, the stock was down several percent. It went back to unchanged. I'm not listening to the conference call, so I'm not sure what's going on. And now it's back down, but only about 1%, about 1%. We'll just have to see how that plays out. So, but it looks like it's not as bad as initially, but we'll, again, the conference call is it's not even 15 minutes old, so a lot could happen with that. We'll just have to see. But the one thing that I would, we want to look at here is on Roku, and you look at on the technical side of things, I just want to get rid of some of these lines so it's not too busy. But see this purple line? That's the 200-day moving average. And that, 200-day moving average is one that pretty much everybody looks at. Some people say it's more important than others, but everybody still looks at it. And it's, and what you do is, okay, I just want to see where it was there. Okay, I went too far back. Let me just go to 2021. Okay. Okay, so whenever you get something that's bumping up against a key moving average, at the same time it's getting overbought, and as you can see, remember we talked about that RSI. See how overbought it's getting? It's above 76. And if you go back in time, you can see. Whoops, sorry. There's things on my screen that you can't see, so I just want to make sure I have it there. But you can see how overbought it is. It's the most overbought it's been, okay, since way back in June and July when it's all-time high. So this one you want to be careful about. And it's, I know it doesn't expire until later this month. But then I see, looking at Apple now, the stock is, it's not down that bad. I'll look at ROKU again. And again, these are not necessarily good quotes because it's not a very liquid market. So it's trading at 64.50 right now. I don't know where they'll put the options. We'll just have to see, because you said it was a $65 call, Rodrigo?
64.
$64 call. Okay, so it's still in the money, so that's nice. Depending on when you bought it, it should be in good shape. Obviously, it was you had real nice gains today, but you do want to think about, especially if we get some further upside movement here. You think about maybe taking a profit, at least a part of it. Especially if you have several of them, you only have one option. You can only buy it or sell. That's why I try to buy cheap, a little bit less expensive options, so that you can buy more than one, so that you can, when you sell them, because boy, there's nothing better than when you sell half and you've like, oh my gosh, or let's say it goes up 300% quickly and I only have to sell a third, and I've covered my initial investment. The rest is great. You can let it run, and that's what I would do if you had taken some profits today. But if you haven't, then you want to look at, again, this thing's getting right up to that 200-day moving average at a time that's overbought, at a market that's getting overbought. Let's look at the S&P 500. Well, actually, let's look at the NASDAQ, because the NASDAQ is obviously where the Roku is in. Whoops, let me pull up here. But again, now the RSI is not the only measure of being overbought or oversold. But you can see that we're starting to get a little overbought here on the NASDAQ, the NDX. It's not wildly overbought, but it's the most overbought it's been in a little while. And again, it got more overbought in 2021, but in 2021, interest rates were at zero and the Fed had QE. And now the interest rates are up and the Fed's doing QT. So obviously, it's going to be a little bit tougher for the market to continue to rally in an overbought condition without that kind of, even though the Fed is talking about pausing, they're not talking about doing QE or taking interest rates back down to zero. So my thinking would be, you want to consider taking some profits there, because it is getting overbought on a technical basis in a market that's getting overbought on a short-term basis. Now, if you're still bullish on it, there's nothing wrong with buying the thing, selling it, and if you say you sell the whole thing and buying it back later. If the thing dips back down and you still like it, you can go back in when it's trading back down at say it drops to 62 or something. Say, hey, I still like this. I'm going to go back in. There's nothing wrong with that. You can be a little bit more active and be more nimble. But just my point with that is it is getting a little overbought. So I'd be careful about this on a short-term basis. It might go back down and rally back up by the end of February, but you can also be a little bit more active in the trading. And I'll say this, I don't want to say this. Look at this. I'm going to get rid of these lines, that purple line. The one thing to be bullish about, of course, on a longer-term basis, is the fact that, oopsie, sorry. Okay. You know what? Here, hold on. Let me just make this chart bigger for us. Okay. There we go. A little bit bigger. I want to go over to this thing is bothering. Oh, shoot. There we go. I'm going to get that out of the way. There we go. I'm going to do it again. Hold on. I'm going to go back to Roku, though. ROKU. Okay. Let's go back to look at this chart. And we'll go back to, sorry about that. But look at how this thing is. See how it's building a nice base? You can see it's way above. Well, okay, I got too many lines on there. It makes it crazy. Bang, bang. But see, if you, no matter how you want to draw, look at the trend line here. It broke the trend line a long time ago. It broke above that trend line a long time ago. Whether you draw it like this, which is really the way you should draw it. Gosh, it's been trading above that for a long time. But no matter how you draw it, if you want to go way out to here, That's still above that trend line. I mean, it's turning back up. It's forming a nice base. So on a longer term basis, the stock looks like it's, and let's shrink it up here. And I'll go just more, much more. See how it's making a nice higher high? See how it kept bumping up against that 60 level? Let me get rid of that chart. I'm sorry, let's get rid of that line. And but see how right here, and these are the things I like to talk about in the chat room. See how it kept bumping up, got just above 60 and stopped there, stopped there, stopped there again, stopped there again. It finally is breaking above that. So if it trades back down to that line, it's not 60, it's a little above that 60 level. Stock trades back down to, where's that line? I'm losing it here, I'm sorry. There we go. At about 63 and a half, gets down to 63. That might be another. So in other words, that old resistance level becomes the new support level. It gets back down to the support level. That may be a good place for it to bounce, especially if it works off this overbought condition. Then you can look at it again. So these are the types of things we try to talk about in the chat room.
Right, and the Tuesday session. So basically, look, I'm just going over basically everything that we got to know here from our viewers here. So 56% of them have an open position, right? 60% of them want cash flow. So they want the right things. They're looking for cash flow. They're looking for the right thing. So that's accurate. We've also seen that 43% of them have blown up one or more accounts. And coincidentally, we're seeing that 88% of the people on this session are trading alone. So I guess you can kind of connect these things there a little bit there, right, Matt?
Right, exactly. The trading alone thing, that's the hardest thing. And to be able to call, people, they ask me all the time, hey, I own this or I'm thinking about buying this. What do you think? And I say, I don't like, hey, I love that trade. I don't like it because of this reason. Everybody's making their own decisions, and believe me, I've told, I've certainly been wrong, and I'll be wrong in the future. But the whole idea is using risk management, but talking to other people. And like I said, I pointed out the trade we had in the Amazon a while back, but there's trades every single day that people are in the chat room talking about. And this isn't a chat room with 30,000 people in it, and you don't know who the hell's, it may be somebody pulling a pump and dump where they're trying to pump up a stock because they own the calls, and so they'll pump it up and then dump it to you at higher prices and walk away. That's not what we have here. It's a small chat room. I mean, it's a nice size, but it's manageable, and people are helping each other out all the time. And there are people asking questions about, I do not use Robinhood. People are like, I got a question about Robinhood. I just don't know how to answer it. I don't use Robinhood. I never have. But people know, yeah, do this. And there's some VIX options that people have a tough time trading in. My trading platform uses them. Some don't. And they helped each other out. We do it all the time, all day long, talking about different ideas. And so trading alone is just, it's just like I said earlier. If the pros aren't doing it, how do you expect to do it? There's just so few people who can do it on their own who aren't talking to other people constantly.
Right. So yeah, I mean, basically that was pretty interesting though. So we can get to know the viewers. They can get to know really they're not alone in this, right? It's obviously hard out there for you to try to figure this out on your own, especially with all the things that are happening, geopolitics, Fed, inflation. It's quite a lot, for somebody that's new into trading, right?
Right. No question about it. No question about it. And I mean, look at the thing that happened today. I want to show this one trade we did today. I don't know if it's going to work. And this is the best ones to work. You show me all your winners. I mean, well, I'll show you one. I don't know if it's going to work or not, but I'm going to tell you my thinking behind it. Okay. The QQQ, again, the NASDAQ 100, the ETF for the NASDAQ 100. It's had an unbelievable move. And so I'm worried. It's like, boy, this just seems parabolic. I was worried yesterday. I thought it was crazy yesterday. But at the end of the middle of the day today, we bought some TQQQ. Again, the TQQQ is the 3-times leverage ETF on the QQQ. And but so the reason why I did it, I bought the puts on the TQQQ was because the QQQ was getting so incredibly overbought on its Bollinger Bands chart. Now here we'll do a little education. We'll give you an idea of what we do with the education. Some people are, what in the world is the Bollinger Bands chart? Well, a lot of people like to look on, very especially short-term traders, the 20-day moving average. And as I mentioned earlier, a lot of people like to look at the 200-day moving average. You should always look at that. You don't have to necessarily believe that it trades through, but always have an idea where it is, because a lot of traders do watch it. But what it does, this is the 20-day moving average, and that is this gray line right here in the middle. And the purple line is when the stock gets 2 standard deviations above its 20-day moving average. The green line is when it gets 2 standard deviations below it. Usually when it gets below that line, it can represent a good buying opportunity. And when it gets above it, it represents a good selling opportunity. But you can see here, sometimes it can ride that line. If you took it here, it rode it higher for several days before it rolled over. But this one is broken well above that line. I mean, the whole bar is above that line. That's the first time. I went back and that since the QQQ came to inception in 2004. This is the most over. I went back and watched very carefully over the past several years, and it's definitely the most overbought. I eyeballed it. I can't say for absolute sure, but I'm pretty darn sure for the rest of the years. In other words, the last 16 to 18 years, this is the most overbought on this particular reading, most overbought it has ever been. And I thought, there's so much hoopla surrounding Chairman Powell's comments that this is a good entry point. Again, risk reward, making intelligent decisions, not just licking your finger and sticking, putting your finger into the wind, trying to guess what, which way the wind's blowing. It's like, no, we're going to make intelligent decisions. Sometimes they don't work, but here is one, the most overbought ever. Again, on only short-term basis. And then we go back to, and so that's why we went in and bought the TQQ puts. Now, and remember on the QQQ, also on its relative strength index, its RSI chart, if you remember, I showed you earlier. There it is again, RSI getting overbought. So we had a couple of readings there. That doesn't mean, here it made it, broke above its 200-day moving average, made a nice higher high. So there's a lot of reasons to like it intermediate term, but just getting too far ahead of itself near term. That's why we did that trade. And some of the people are like, oh gosh, man, the market's way too powerful. I'm not going to do this. And fine. And that's a bunch of people did. And I did say, hey, listen, this is not a big trade. I totally agree. The market's upside momentum is unbelievable. We got to be careful about making big bets on the negative side. But I did buy a small amount in the middle of the day, and towards the end of the day, I added to it. Again, still not very big, but this is what we do, and this is what we try to help people with during the day, because it's like when the market's going straight up, you're like, oh my gosh, all I'm going to do is buy. But at some point, it's going to turn down, and people lose everything when they get too complacent. This was a situation where I try to help people say, hey, if you got a lot of bullish bets on, at least buy a few puts to hedge yourself a little bit in case the market turns.
Right. So I threw a quick poll there for the folks to get a sentiment of bearish and bullishness here. In the meantime, Pavel has an interesting point here, question, basically saying that until the war in Ukraine, you really never know when the bear market is over due to the possibility of nuclear danger. Where do you think that is in the minds of investors right now?
It's not in the minds of investors. And it should, how much should it be? It should be, no question. Maybe it shouldn't be in a big way. But at the same time, it's hard. It's so hard because I guess the thing that I just can't believe is that people say these tactical nuclear weapons and really won't be that big a deal. Oof, that scares the hell out of me. But if you get a major nuclear explosion, of course, it's a major attack. It's the end of the world. So it won't really matter whether you have puts or calls or anything. We're all going to be dead. But it's something that concerns me in a big way, and I don't think this war is going away. That's another reason why I think when we talked earlier about CPI and stuff. Food. The Ukraine and certain parts of Russia are the breadbasket of Europe, and those food prices are high. I don't know if anybody else is going grocery shopping, but prices have not come down much at all in food. They've certainly come down at the gas tank, but they're still high. These say that if this war is going to continue, so are it's going to be, the supply of these two important commodities is going to be soft. And again, the big thing is that what's so relevant is that people think, well, as long as the economy slows down, the Fed raises rates. It's like, well, wait a minute, that's demand side inflation. A lot of what we're experiencing right now is supply-driven inflation, and that's what happened in OPEC during the 1970s. I was alive then. I remember it. I remember sitting in the gas line with my mother, waiting to get gas, waiting for an hour to get in line to get gas, because there was a shortage It wasn't the demand side. Demand was still fine. If demand is still fine, but the supply is shrinking or is small, prices are going to remain high no matter how much demand shrinks, because people still need to drive their cars and people have to put food on the table. So that, and if they've got to spend more money on those things, it gives them less money to spend on other things that really drive this economy. So so this war in Ukraine is a big concern for me. It's turning into a war of attrition 6 months ago or longer, and it's just doesn't seem like it's going to change anytime soon. And if that's the case, again, inflation's going to come. People are saying inflation's come down. I was like, of course it's going to come down. I've said that all summer long. The question is it come all the way down to that 2% everybody's looking for, and really be to the point where consumers who are now, we have 64% of the people in this country live paycheck to paycheck. We got credit card debt at an all-time high, and the savings rate back near all-time lows. That's not the type of great thing that spells. That means that stagflation is still on the table to a certain degree. Is it going to be the stagflation we saw in the 1970s? Almost certainly not. That doesn't mean when you got a stock market that's expensive, that is not what you want to be. But I guess my point is we're still going to see a lot of volatility, and that's why these trading rooms are so attractive and so helpful.
Right. And I want to give a big shout out here to Jay, our most recent family member that joined the chat room. Let's go.
Welcome, Jay. Welcome aboard. Glad to have you. And we'll have plenty of stuff to talk about in the morning because we'll be talking about these stocks. I'm looking at Apple now. It's bouncing all over the place. It's down about 1%, so it's not as bad as it was when it was down about 3% earlier. But this conference call, I'm sure, is still going on. We'll know more in the morning. But we also have, of course, see how Google and Amazon are trading, and then, of course, the employment number, which comes out at 8:30 tomorrow. That could have an impact. So we're going to have a lot to talk about tomorrow. So you'll be starting on a really good day. And again, that Zoom call we do is on Tuesday. That'll be at 11:30 Eastern time. Again, we talk a lot about what's going on now, but don't be afraid. And I answer almost every day, and sometimes several times a day. And don't be afraid to ask. Hey, I've got something in my long-term portfolio. What do you think of that? And if I don't have an answer, sometimes I don't know every stock. I'll just say, I just don't know that stock. Its chart looks like this, and let's check out the chart. But I'm going to be honest with you. I'm not going to. I don't pretend to know all the stocks. Don't pretend to have all the answers. If I don't know, I'll just say flat out, I don't know. But a lot of times I can have a good, at least give you an idea of some of your long-term holdings as well. So we have these unbelievable people in the chat room. We have people who live in Eastern Europe, and I can't even begin to tell you how helpful they were this time last year when I was bearish on the market. We were buying puts, and we were talking. These people are saying, these people who live there, they're going, this is really bad. This is not going to be over in a week. This is and we see what's going on, and boy, that was really helpful. We made a lot of money off that. We have people, guy who works at UPS, a guy who works at Federal Express, and they're talking to us about the shipments at Christmas time. And people work in real estate, and they're given their fundamental backdrops. It's a great community where I'm sitting there going, hey, this is my experience and learning from analysis. This, and a guy will come in and go, well, that's great, but I work for UPS, and I'm telling you, this is what's really going on. And that is fabulous stuff. We get that from all of our people in the chat room all the time.
Yeah, big shout out. It's a great community. Ever since we launched the chat room, it was 2021, right?
Right.
It's been great, the amount of traders that you've helped and everything. And so we have the polls in here, Matt. So 55% of the people are bullish and 45% of the people here are bearish. 50-50.
Okay, well, that of course, that's that's very interesting because I think a lot of people at the end of last year, or just over a month ago in December, I think that would have been significantly more bearish people. I'm in the bearish camp, as you might gather from what I've been saying so far. And the reason for it, and I'm needless to say, I am fighting it right now. There's no question. But I did think I did say, hey, listen, we could see a rally here in January. I didn't think we'd be anywhere this much, and I really was surprised by the Fed by Powell's comments yesterday. But the fact of the matter is that the stock market got pushed. Again, this is just one man's opinion, but I talked to some of the smartest guys around, and again, Miller Tabak, we have accounts, billionaire guys who I talk to fairly regularly, and they ask for my opinion, which is great. But and it just the thing is that we pushed in 2020 to 2021, we pushed the stock market way above the underlying fundamentals. Everybody knew it. Everybody knew that there was a joke, that there's no way the stock market deserves to be here. But the economy is basically stalled, almost completely shut down. We have to do something to keep the economy going and the financial system running. And don't worry, eventually stocks will catch up and will be fairly valued. That's fine. But the problem is the Fed kept the stuff on the liquidity too long. They could never play catch up. All right. So as I said, there's only been 2 times that I'm aware of anyway, where the stock market got above 20 times earnings, and that was in late 1990s, when behind the scenes the Fed and other central banks were flooding the system with liquidity to save the system because of the Y2K problem, which they were able to fix in time. But as soon as we got to the year 2000 and the Y2K issue was no longer a problem, now guess what? They pulled the liquidity and the market went down. The market went down huge. Not, again, it was more overvalued then, so I don't think it'll fall as much this time. I think it's got further to fall because guess what? 2000, 2003, we had one of the weakest recessions ever. And yet the S&P went down 50% and the NASDAQ went down 80%. Why? Because they got pushed way too overvalued on a valuation basis. And therefore, it didn't take a recession to knock it down hard. The same thing happened this time. They flooded the system with liquidity to save us from the pandemic and the global economic shutdown. It's going to take longer and more downside. Again, not because it didn't get as overvalued as it did, not even close, as it did in 2000. It still needs further to go because, like I said, every bear market, every single one, whether it was a recession or not, every bear market since World War II has not bottomed until we got to below 15 times earnings. We're at 19 times earnings right now. The lowest one we got to 16. If we could just get to fairly valued, at least you have something you had to hold your hat on. But with earnings coming down and everybody saying, "Oh, earnings they're not as horrible as they thought they'd be," it's like that's fine, but estimates are still coming down. How can estimates go down? And it's like, well, we're looking further out, but that's fine. Bottoms in stock markets do take place before things turn back up, but they take place when the market's cheap. When they say it's worth paying up a little bit here, it's worth taking the chance. Right now, we're not there, so that's why I'm on the bear. However, we want to play it from both sides, and again, with the short-term trading, when we see the market rallying, we see upside opportunities. We want to jump all over.
Right. No, there's definitely a lot there to cover there. So we've definitely gone, it's definitely been packed. And I know, guys, that if you think that this is, like, wow, I'm overwhelmed or this is great, I'm telling you, you do this all day with Matt and it definitely will improve your trading, right? Trading with the right community and all that stuff. Let's see what else we got here in the chat room. In the chat, we got some questions in.
Sure. If there's a couple more, people have some options positions we want to cover, I'll be more than happy to
all
touch
right.
on them too. Let's
see what we got. Let me pull up here. Let's see. There's a few ones. PayPal. No, Nicholas, we got to give for someone else, Nicholas. All right. We have LV.
I'm sorry, I'm looking off to the side. I'm just looking at where Apple's trading, so I am paying attention. Apple's now down about 1.5%. Not horrible, but it's back down again. Just be aware. But again, we'll know more tomorrow morning. And the Nasdaq's down about 1%. The Nasdaq futures, that is.
All right. Yeah, something happened there with my mic there.
Oh, okay. Sorry.
But we have Dina Fogel with Meta put $185, expiration February 10th. So short on Facebook. Dina.
Okay. And sorry, what was the strike price?
185.
185. Okay.
Now,
boy, when the one thing you always worry about with a stock like this is because obviously it had been down for so long and just got creamed that there were a lot of shorts, and the shorts obviously got squeezed in a major way. And when it gets short squeeze on good news, the stock can hold up. Now, however, look how overbought it is. Remember we talked about that 86, right? That's a number for, it's a negative number. Hold on a second. Let's just look at this. Let's just go back to, I'll go back 2018. Okay, it's more overbought than basically, it's hard to see here, I'm sorry. There we go, sorry. But see, this is more overbought than any other time in the last several years. So I'm liking that put. Obviously, there's risk involved when you get a stock that rallies 20 some odd percent in one day, kind of hold up. But with the, well, let's see where it's trading now in the aftermarket. I'm sure it's down at least a little bit. And it's already trading at 186, 186.50. So it's already down over 1% in aftermarket trading. It could be anywhere tomorrow morning. We'll see what happens. But I think there's a good chance that that thing's going to play out. And if the overall market gets hit hard, it's going to come down too. But they do have good news, and it just didn't seem like it was good enough to account for a. Well, again, look at this. Okay, let's go zoom in a little bit. Boom. Okay, now here is a stock. Not only is it the most overbought, at least by this one reading. Let's get rid of some of these lines in here. I'm sorry, it gets a little busy. But look at this. Okay, before their earnings came out, Meta rallied 75%, 73%. Okay, and then so on top of that, okay, then it rallied. I'll give you the exact amount. How much did it rally today? It rallied today 23% after rallying 73%. Okay. Okay, and then remember we talked about that Bollinger Bands chart? Let's look at the Bollinger Bands chart. Equity, BOLL, bang. Look how, again, I'm going to make it a little bit easier for you to see. Let me get rid of these lines. There we go. Look how extended it is. I mean, that's crazy. It's probably nowhere near as extended because it was one day on its weekly chart, but let's just take a look real quick. Look at it on its weekly chart. It is way extended here. So at least, I mean, obviously there's no guarantees in life, and there's sure as heck there's no guarantees in this market. But I'd hold on to those. I think they're going to be, they're going to do well. Meta right now is the stock is at 186 and falling. So I like those puts. I'd hold on to them for a little bit, and we'll see what happens tomorrow. What happened after Microsoft reported. Everything opened down and the market bounced right back. Maybe that'll happen again. But the market has rallied 8% since then. That's just the S&P. The Nasdaq's rallied over 10%. I think there's a good chance that people will be taking some chips off the table after this big run, and you'll do well. If it really gets cracked tomorrow and you make some nice profits, especially if you double your money, you want to at least sell half. And because you just never know what's going to happen next week. But did you get the invite? Okay, I'm sorry. And so that's what will be. That's my answer on that. I just think the stock is, again, even though they reported good numbers, again, let's just go here. I'll get rid of the Bollinger Bands.
I know the chat members love earnings. I think it was Tiffany that made a killing on Ross puts last time, like thousands of percent. Like the folks learn from your strategy and they give trades as well between themselves.
Yes, exactly. And that's and she was one that came out. I had nothing to do with it. She came in and said, let's get these things. And she made, over time. But I mean, Meta is up 114%, from its lows. It's and the stock may be going to 300. Not going to go there in a straight line. Okay. Just like it didn't go down in a straight line. Look at these big rallies here. Okay. Look at that big rally. This one's getting ripe for a pullback. I'd hold on to those puts, see how they do tomorrow. But I think you're going to do well tomorrow and probably after tomorrow. But if you do, especially if you make a big, make a killer, this thing drops, into the low 180s, which I think is possible. You think about taking at least some profits and holding on to the rest.
Right. Now, I mean, imagine, folks, like having a chief market strategist analyzing your trades. So let us know if you like this, because we can do a couple more trades here. Let's see what else we find. All right. LUV. So DT Gardner has LUV June 16th, $35 calls.
Okay, here's a trivia question for you. Why in the world does Southwest Air have a symbol LUV? What in the world? What kind of symbol is that for an air? I mean, what? Love? Okay. Well, it's Love Airport. It's the name of the airport where they were based out of in Dallas. And I'm afraid that's the one where JF Kennedy flew into. But they now have their main airport in Dallas, much bigger airport. And Southwest was looking for a place to, have a hub where it can put all their planes. Well, the big airport didn't have enough for them, so they just went to the smaller one, which was Love, and that Love Airport. So I'm a wealth of worthless information, but let's talk about important stuff. Okay, now, so the stock on this one is looking good. You see here, well, let's go just back it up a little bit. I'm just going to go back further in time, and I'll get rid of some of these other moving averages. So, oops, I'm sorry. 2021, bang. Okay, there. Okay, now that's the 200-day moving average on the purple line. Let's get rid of the other lines. Okay, first of all, let's look at the RSI coming off a very oversold level, but not overbought. So that's good, right? See how the 200-day, that's one thing that's always important with whenever you break either a support or resistance. If you break it by a little bit, that's enough. I mean, that can sometimes be head fakes. If it's just a few pennies or even a dollar, it's up 1%. You want to see it 2 or 3% before it really shows. And look how this purple line, the 200-day moving average, it got slightly above it here back in the end of 2021, sold off. Slightly above it here, sold off. Got right to it, very slightly above it, sold off. Got right here, same thing, very slightly above it, sold off. Got right to it, sold off. So that's really tough resistance. However, if it can finally break above that line, that's going to be really bullish. Can that happen? Well, the odds are getting better that it will. Because look at this. If you want to learn anything about technical analysis, is look for higher lows and higher highs, or lower lows and lower highs. Okay. Obviously, higher highs and higher lows are positive. Lower highs and lower lows are negative. But look at all these lower highs and lower lows, all the way. Lower high, lower low, lower high, lower low. This one didn't quite make it, almost made a higher high, but didn't. But it did make a higher low. So now, if we get a thing, if we break above $40, this thing is going to take off, fly. Airline stock. Okay, great. So if you own this thing, especially out to June, you buy more. I know it's going to cost you. Maybe you buy with a different expiration date. That's fine. But I'm telling you, it's got a nice setup because we got a high low. But so if it breaks above the 200-day, that's good. But if it breaks above 40, that will follow that higher low with a higher high and take it meaningfully above that 200-day moving average. That's going to be, well, momentum players are going to come jumping into the stock. And there's nothing else. Let's make it green here, and bang. And you can see that, boom. See, well, I would also take it above its trend line going all the way back to 2021. So you got to break above 40. That's going to be really good for this stock. And like I said, even though it's testing that resistance level, it's not overbought. See, it was gotten overbought here when it tested the 200-day. Here overbought. Here was overbought. It's not overbought this time. So maybe this time will be the time it finally can go. Now let's look at another chart that I'd like to look at, the MACD chart. Again, educational stuff. This is kind of like, okay, now this is very interesting. Let's I'm going to get rid of some of these lines again. So I always look at, I've been doing this for years, so these lines don't make me, doesn't make it more complicated for me, but it can for others. Now, what we got here, we need to be a little careful because you see what this is we're looking at the 12-day moving average and the 26-day moving average. And it doesn't give you a top or a bottom. What it does is show you a change in trend. After the top, it shows you it's trending. The trend has now moved lower. Or after a bottom, it shows that, several days or maybe even a week or two afterwards, it's showing that the trend has changed to the upside. Here we are at a situation where the stock looked like it was curling over and looked like it was going to do another one of those failure at the 200-day and break down. But it's got a little head fake. See how we get these head fakes in here? They don't really mean anything. You need to meaningfully break. Okay, and if you say, why is that important? Well, the 12-day and 26-day moving averages, it's kind of like the golden cross you see here about it all the time. Golden cross, when the 50-day moving average crosses above the 200-day moving average, that's a golden cross. A death cross is when the 50-day moving average crosses below the 200-day moving average. But that's a little bit more longer term. These are very short terms. We're just using 12 and 26-day lines. But you can see how it's a little bit of a head fake. So if this thing can turn back up, it's going to be very bullish. So we'll be watching this. If it breaks back down, that's going to be a sign like, oops, this thing ain't going to work. Time for me to pull the plug. So that's going to be, so if you can get, if you can look at the MACD charts, keep a close eye on that. And like I said, this thing breaks above, so that's the downside. That's what you want to be looking for downside. On the upside, you want to look at that 200-day moving average at 30, just above 38, and a break above 40 is going to be very bullish for this stock. I'm a little bit more bearish on the consumer, so I'm worried. But it was funny. The Southwest Air CEO was on last week, talk about that, the whole debacle when they got on their whole reservation system blew up, and he didn't sound, it's very convincing. I I was like, geez, they need a better spokesman than him. He was just not as and I mentioned that in the chat room. Well, a couple of guys came on to the chat room and said, well, that might be the case, but I tried to fly to San Francisco for the NFL playoff game between the Cowboys and the 49ers, and every Southwest Air flight was booked to the max, and it was the only airline that was booked. And another guy kind of said the same thing, but again, this is how we. And I said, well, okay, well then I'm not going to be bearish here. I'm going to hold off and see if this is a positive thing. And sure enough, the stocks bounced back. So again, how we working together. I just saw the interview on TV. I wasn't going to base a negative bet on that. But I was just saying, hey, you got to look at this thing. This doesn't sound too good to me. And people came back and said, no, they're still a low cost airline. They still go to a job. They're going to fix it. And looks like it's going to get that way, but we'll see. Watch that too. We break out further from here. Again, don't be afraid to add. Again, if you only sold the stock, then you're really not afraid, because then you don't have an expiration date to worry about. Don't be afraid to add to winning positions. The professional money managers do it every single day. So that's a good one. Thanks for that. It's looking pretty good, but again, watch out for that MACD chart. If it curls over, especially if it breaks below 35, that's going to be a signal that its trend is reversing. You want to get out of take your lumps while you can and get out.
Right. So I'm just seeing here. I don't know if you're familiar with Ford. They reported, I don't know if it was a big loss in the billions. And look, I mean, is this tied, or is there anything that you see out there with chips, Taiwan, China, and like the whole situation with all that?
Well, I mean, they put a lot, and so there's a lot of things going on. Now the stock is down 6%, 6.5% in their post-market trading right now. It's trading at the 1340, and it closed at 1430. So this is tough. And you look how the stock was already getting overbought. See that? Let me get rid of some of these lines again. That RSI chart was getting overbought. Again, I look at other things like stochastics and Bollinger Bands and others. But you can see, again, here was a stock. It looked like it was getting good, right? Right? It was bumping up to it's trying to make higher low, it was trying to make a higher high, and this is going to open way down here. Now it's going to be open right down by and it broken above the 200-day moving average. Looks like it's going to open right there. If it can hold that, fine. But this news is you saw how they're cutting prices on the Ford EV. I'm sorry, the Ford Mustang EV. That's never good. Looks like a price war there. Of course, that has kept Tesla from rallying straight up. But yeah, I think they have the components issues. They're still having a tough time getting chips. And believe me, if something happens with Taiwan and China, the chips are good. The auto industry is going to get just crushed. I mean, we are working hard to build these confabs here in the U.S. in both Ohio and Arizona, but those take 2 years to build. It's something in the next year or so. These auto industries are not going to get anything, and it's going to be really, really messy. So I'm not a geopolitical expert. There are some people who think it's going to happen before the end of the year. I have a tough time thinking that, but why the chairman of China would do that, I don't know. But it's possible, and you get something to be careful about. But yeah, this news, when you get a stock that's when a company that's been around a long time is down 6% after they report their earnings, that is really not good. It's one thing if it's a new tech company, high flyer, okay, but we just got too bullish on it. Ford is Ford. They've been around forever. Great, it's a good company and all that. But And boy, anybody who drives an F-150, they love them, right? I mean, I don't own one, but I have a friend who does. Wow, what a great truck. So they make a good product, but just because, you know, we all know that there's been times where it hasn't been a good company, but poorly run at times. But this one's one I want to avoid for now with this negative news and the fact that it's overbought. So we have a technical and fundamental situation, and they're pouring a lot of money into EV, and they're cutting prices to a point where they're not going to make money on those Ford Mustangs. They said they would not cut them to a level where they wouldn't make money. Well, they're going to do nothing but break even. So, and what are they going to do? They're just going to walk away from it, off all that money they spent. And besides, it is the future. It's not a great situation, even though General Motors reported some great numbers. Ford just doesn't seem to be executing to the degree that General Motors is. So I wouldn't be buying this on weakness. I would not.
Okay, we have Jake. So Jake, good question here. So just to kind of go over this briefly here, Matt is in the live room the entire day, right? He's whipping out trades, entries, exits, strike price, expiration date, level, like symbol, everything you need to make the trade. You do get the push notifications or you can just have the window open, but you can get the push notifications. You just have to download the Benzinga app on your phone, and you will get the the alerts whenever he's buying, selling, trimming, or adding to a position. Separate from that, you get 6 email trade alerts a month, which are going to be stock swing trades. These are stocks, not options. And you can always ask Matt about stocks in the chat room as well.
Absolutely.
So the Tuesday session is on Tuesday, and it's from 11:30 till about 12:30. So that's a full, max 1 hour. It started as a 15-minute session, but then Matt, he can go for days. So it ended up becoming a longer session now, and it's great for the folks. This is where he does education. He updates the trades. He tells you what's going on in the markets and how to take advantage of it, right? So it's a very important meeting. Make sure you don't miss it. So, and the link is in the chat there, Jack, as well. So Matt, I guess it takes me to Tesla. They had a massive price cut. What Tesla is an indicator of what for you?
Froth. It's not because froth in the market has just gotten too much short term. I'm not saying anything negative about the company or its cars or anything else. It's just, again, this isn't crazy overbought compared to other times in the past, but it is. I mean, the stock is up 90% in 4 weeks. 90%. That's okay. I mean, they say, well, it got oversold. It got sold down to a level that should never have traded at. That might be true. I don't know if that's the case, but even if you think that's true, stocks don't go up in a straight line, and neither is Tesla, and it's just starting to get ahead of itself. And with this news out of Ford, and again, part of it has to do with this. They believe me, they talked about execution. What the hell is that? I'm not really sure what that means. That's what you say when you're trying to cut. I don't want to say cover something up, but I mean, it's they did a lousy job. But the stock is not acting well that poorly. It's down only less than 2%, which for Tesla is not a big move. So it's not trading a lot lower off this news. But you see, the stock is getting overbought. Let's look at the Bollinger Bands again. I'm just talking about short-term stuff. I guess and boy, the people are just pouring into this thing in terms of trading call options. You see, it's extended on its Bollinger Bands chart, but not crazy so. So it's it's not. Say, oh my gosh, you got to be shorting the heck out of this thing. But it's just after this kind of a rally, I want to be holding off. Now let's look at this. Let's go back to the. And I'm just going to get rid of all the moving averages. Can the stock get to its 200-day moving average? Absolutely, 229. It's just not going to get there in a straight line. And okay, let me just get rid of the 150-day moving averages. Okay, now see this 200 level? This is again the things we try to talk about. Shoot. Okay, now we'll go back a little bit further. 202. Okay, now See how this $200 level has been a key level for the stock. Now, on a short-term basis, just draw a line. Let's put here. A little color in there to make it look a little bit stand out. See how, oops, let me do it again. But you can see how it got right up to that level, right up to 200. I'm sorry, I just want to get rid of that so you can see what the heck I'm doing. Okay, see how in November, it got right up to that 200 level, failed. I mean, you say, well, that's not much of a sell-off. Well, actually, the stock went from 200, it's down 20%, okay? Or almost 20%, 15%. That's a decent sized decline over the next couple of weeks. This one, obviously, it fell out of bed, got crushed. It fell 50%, okay? But you see I got right to 200 there. Get rid of that cross, let's not do it. Got right to 200 there, right to 200 there. Now it got to it today and pulled back. What's it going to do this time? Can it finally break through? If it can, it's going to be bullish, but it's hard for it to do it. It's because it's overbought. Look at the last two times. It wasn't even remotely overbought the last two times it tested that line. So that's going to be a really tough level to look at. Now, and you can see in the 200, in the 200% range, I'm sorry, the $200 range, you can see how that used to be the old support level. Bang. So now it's resistance, but again, you can see it's kind of in the middle. See how it did? Yeah, it got down to 200, got a little below it, but bounced, got a little bit below it, bounced, and then it stayed above it for a long time, got down close to it, bounced, and when it finally broke through it and failed to regain it, it got hit hard. So this 200-day moving average, that old support is now, that old really important support level is now really important resistance. So the thing is, my point is, the most likely scenario is that you get the stock to pull back a little bit, work off this overbought condition, and actually that would be the most bullish scenario. You'd want it to see it pull back, maybe not 20%. You see it pull back 4 or 5% for a week or two, work off that bearish, that overbought position, and then break through it. That would, because if it breaks through it right now, it more of a chance it fails because it just runs out of gas. It gets too overbought, and people are like, time for me to take some profits. So my feeling now, especially with this news out on the stocks again, like I said, it's only down 1.5%, but with this news out on Ford. And with, let's see, Apple has fallen back down a little bit in the post-market trading. Now it's down 2%. It's not getting killed, but it's down 2%. So the whole NASDAQ looks like it's going to be a little bit lower tomorrow. So Tesla will probably be lower tomorrow. But if you're bullish on Tesla, I think you should look for a little bit of a pullback. Got a little bit, the whole market got a little too much euphoria in it the last couple of days. People going into the weekend, fast money traders will want to take some money off the table. So even if you like it, even if you think it's going a lot higher, I think you'll do better by holding off for a couple of days. And if you own, the stock and you sell it and it gets up to 200 again, and then you, okay, let's say, especially if let's say you've held it for a while, especially if you've held it since $100 or near 100. Well, it goes up to 100. Let's say it's going to 300 and you sold it here. Well, once it breaks above 200, you buy it back. Well, why would I do that? I mean, geez, I sold it at 200. I got to buy it back at 205. Well, if you bought it way the heck down here, you've got a huge profit in it. What do you care? If it goes to 300 and you missed $5 in the middle, so what? Okay, it's just risk management. Whereas you can take the chance and say, oh, geez, it went to 200. I got back to 180. I bought it there and I saved myself some money. Or, geez, all of a sudden, we find out we're heading towards a recession and everything falls out of bed. And I didn't piss away the nice profit I had that I bought in early January. So again, these are the kind of strategies you want to be able to use, risk management, and not buying it all at once and selling it all at once, or buying and taking a thing said, even though I like it longer term, and we did a lot in the energy stocks. I turned bullish in the energy stocks in October 2020, long before anybody else did. And then last year in June, when the thing got too crowded, we had huge rally in all these stocks. We bought some puts in the XLE. We did really well with those. And I said to people, own these stocks. Sell part of your stocks. We're going to buy them back at a lower level. But don't sell all of them. Chevron's a great stock. Hold on to that. But if you want to sell half your position or 20% or 10%, go ahead. There's nothing wrong with trading around this, especially in an individual stock where you don't have to pay a commission. It doesn't cost you anything, right? And if you turn out to be wrong, okay, geez, Okay, I'll just look at the Chevron. With all, I'm going to get rid of all those lines. We're just going to do it real easy. What they call a GIP chart. Equity GP. Bang. Oops. Typed the wrong symbol. Sorry. Okay. Now, so we got in again. We didn't get the low. We got it right in here. Right in here. Okay. And the stock ran up into June. Remember I talked about that. And this is again, this is just for regular stock. Forget about the options. It came in, stock had rallied 170%. And I said, let's take some profits. And then we get and said, but don't sell the whole thing. Get back in. And we got back in. I didn't get the exact low, didn't try to be. We got back in as the stock came down. Of course, it's probably back to a new high, only a slightly higher high, but now it's giving back a little bit. We still love the stock longer term. And we'll see about taking profits at some point. But my thing is, if I had been wrong, okay, and the stock kept going, okay, just pulled back just a tiny amount and kept going, and we had sold 10% of our shares, or 20% of our shares, or even half our shares, and then you bought it back when it got to 185. Okay, so and it goes to 300. So you would have it would have been up 200 and something. You've been up 220%. And you would have only been up 215%. Are you going to lose any sleep over that? No, but you took the chances of using your head because the stock got really overbought here. And let's pull up the RSI chart. Again, in the active part of your put, see how it got over. You see, well, how it got very overbought there, but I actually didn't pull the plug there, but got overbought. And then when it got back down to being oversold down here, we got back into the stock. And went up a little bit lower, but that's okay. And again, it's just you can trade around these, even your long-term. And you may, it's for some people, it's like, don't sell your Chevron stock. But what we're going to do is buy some puts in the XLE. And we, as you saw, as I showed, we made several 100% on those puts, even though we held on to those stocks. Can trade around, again, in this chat room where we talk about, hey, I want to trade around a position. I've got a long-term position. I'm not going to sell it. What do I'm getting a little scared though, because it's up a lot. Okay, let's try this. Let's try this. And that's what works out. So again, there's another way that we look at these things. So I kind of got lost in a tangent.
No, no worries,
Tesla, but I think Tesla is getting a little ahead of itself, and we need to be careful about it, at least on a near-term basis.
Yeah, and I mean, you're always covering it in the live room. So we got David Loringer. I signed him up here a little while ago, like 2-3 weeks ago. Big shout out to you on the YouTube. Basically, he's saying he's very happy with Matt and started with 26K. Now his account is at 34K. So congratulations, David. That's great. And well, I mean, look at the difference. Dave is a member. Let's go.
Yeah, that's great. I mean, that's the whole idea here, is because the market is so volatile, so many things going on. And it's the volatility, even if the bear market is coming to an end, the volatility, we're not going back to 2021 where we just go up every single day or almost every single day forever. That was spurred on by massive injections of liquidity into the system. We're going to be trading more on all these twists and turns in the economy and the Fed and global geopolitical issues. And so I just think if you're trading alone, it's going to be a really tough time. And we've worked out real well here. Right.
So we have a little bit of time here to talk with the folks here. Just we're going to just ask the chat basically, what is a little segment or something that you would like for us to do here with Matt? Like review FANG or talk about, a sector, a specific sector. We've done a lot. Like we've talked about strategies, technical analysis, market discussions. We've shown you how basically, Matt is able to do this technical analysis, all that stuff. Let's see. Naji says, could you please check out Workhorse? Asarin's looking for the energy sector. Naji says, look at the Workhorse chart. Okay, so you guys want tickers, okay? Is that what you guys are looking for? Ticker time, as we call it here. Sector rotation.
Well, let's look at the.
Okay, how about this, Matt? What's the sector that you think the worst and the best, right? So we will do ticker time, CJ. So what's the best sector for you right now and the worst sector for you?
Well, here's one we want to look at very, very carefully here. Is the energy sector. Now, I'm bullish. I think it's going to be really good, but I have to stay nimble. I have to use my head. See how the 50-day moving average, not really that important. That's the yellow line. So let's get rid of that. Bang. We got the 200-day moving average. Okay, that's important. But look what happened with the 100-day moving average. Okay, I'll get rid of the 200-day. That's the green line. See how we bounced off it? You know, 1, 2, 3, I say specific days, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We've tested that thing in the last 2.5 months, 2 months or so, and it's held it each time. If it finally breaks below it, that's going to be a problem on a near-term basis. So we'll want to look at some puts in the XLE. Now let's look at it further. We can just look at one little one chart. Oops, XLE. Remember, this is the energy stock ETF. Sorry about that. Let me see if I can do it here. Hold on. Oh, there. Okay, let me try one time. XLE. And remember, we talked about the MACD chart. Remember, this is momentum. It's seeing a negative cross on its MACD. It's only a very small one. Let's get rid of some of these lines to make it easier to look at. Again, the 100-day moving average. You can see how good that's been recently. But see, it's seeing a negative cross. Let's get rid of that. So it's not so, okay. Negative cross. It shows that it's maybe seen. All these other times, it was testing the 100-day moving average. It was not seeing a negative cross. Now it is. See what happened the last couple of times? Negative cross, sold off there. Negative cross there, sold off. Negative cross there, sold off. Remember that big June one. So this is going to be one where I like it longer term in the intermediate term. But we're going to be looking at these XLE puts if we get a little bit more break of that 100-day moving average. I'll probably look at like the $82, $84 puts. We'll see what I would say, maybe $80, $83 puts for a fall down into the low 80s. So again, even though I like it, but you see here too, it also made a slightly lower high. Okay, higher low, that's great, but a slightly lower high. Boy, if we break below that, it's going to cause some problems. I like it long term on a fundamental basis. Short term, I'm a little nervous, so I'll be looking at the put options in this one. And I'll be looking at them tomorrow. I'm not saying we'll trade them tomorrow, but if we break below that 100-day moving average, and the thing is too, is that if it bounces strongly off that, and we get this big reversal, boy, we're gonna jump right in. So I'm neutral, but ready to jump. I mean, sometimes you're neutral. It's like I don't. It's gonna be a week, it'll be days or weeks or months before I jump back on this thing. This one we're gonna be nimble. It could be tomorrow we jump in or out of this thing. More likely next week, but we'll be playing this one soon. Now, oh yeah, so you asked for the one I like the least.
Yeah.
I don't want to overstate this because I'm not. It's not like I'm overly concerned, but see this run again. The bank stocks have had a nice run, and this is the KBE bank ETF, and it's trying to make a higher high here, but it's been kind of trading a sideways range. We're at the top of that sideways range. It's getting close. I mean, the 50-day moving average is starting to curl up. Can this thing break above and give it a golden cross? See what happened when it had a death cross. It was really bad. If it can get a golden cross and make a higher high, that's going to be bullish. However, it's very overbought. We also have a yield curve that's very, very steep. I'm sorry, it's just the opposite. It's very inverted. Okay. And what does that mean? That means they're going to make less on their margins. They loan money out and get paid on the long-term interest rates, and they pay out to their depositors on short-term interest rates. So, and when long-term interest rates are usually higher, they collect money at that level and they pay out at this level. They make that spread. Well, now the long-term interest rates are low. They're losing money on that. Okay, that's not good for banks. And I know people say economy reopen, all that stuff. That's fine, but again, it's had a great run. It's getting overbought on its RSI chart. Just because a stock is a group or a stock has rallied a lot doesn't mean it can't rally more. It's up 15% or so. But again, that fundamental issue is something I'm concerned about. I'm also concerned about the consumer. And so right now I would be looking at maybe like, for instance, Bank America. Okay, look at Bank America, which is a great company. I happen to, I know. Oh, see, it's not really overbought. See, that's not as overbought. Okay, so I'm not going to look at that one. I like that one because to trade, not because I want to buy puts in it, because I think Brian Moynihan's a great CEO, but JP Morgan, I don't know about. Must be Citi, must be the ones. but because it's a low price stock, and therefore its options are cheaper. But here, look at Citigroup. There's a stock, it's overbought. It's lost its momentum to the upside. It's trading sideways here, and so maybe that's the one that we would be looking at buying puts if we see the market and this group start to roll over a little bit more. I'm not there yet. It is positive. It broke above its 200-day moving average. It broke above its trend line going back to the early 2022 highs. The stock looks okay, but again, overbought. And so I'm worried about that. I'm not saying it's the worst. I think these things are going to get crushed. And I'm not calling, even though I'm bearish on the stock market, I'm not calling for a repeat of the global financial crisis. But look at this one. Here's another group getting way ahead of itself. And it's great that interest rates are coming down. It's great. And I believe me, I was saying all last summer, saying, hey, the housing market's telling us that in last year, I'm sorry, the first half of last year, the market started pricing in a repeat of the crash in housing that took place 15 years ago. And I'm like, that's not going to happen. Fundamentally, we have nowhere near the leverage that was in there before. Yes, it's going to be a problem. And interest rates are going up. That's going to hurt the market, and it did, but it way overshot. And we had all these stocks trading at 5 times earnings, 5 times. Again, they were pricing in. They were pricing at the same levels that they were trading at, same valuation levels they were trading at the lows in that 2006 to 2009 timeframe. That was just way overdone to the downside. So I like the group, but now it's getting ahead of it. See how, again, the RSI chart getting overbought. Let's look at the Bollinger Bands. I really should pull up the stochastics. I look at those all the time. But see how it's getting extended on the Bollinger Bands chart? So it means it's more than 2 standard deviations above its 20-week moving average, 20-day moving average. I apologize. And so, and again, I know that interest rates are, they've come down, especially in the last couple of days in particular. But I think it's kind of overshot there, and we got to be careful about that. You probably, if you want to look at options, you probably want to look at the ITB. Their options aren't very liquid, unless something has changed. I don't think they are. But yeah, see, they're just not very liquid. The open interest just isn't very big. But there are individual names we can look at. So that's one where I'm getting worried about. Again, not because the housing market. There's not enough houses, and there's still people looking to buy. And it's, again, maybe I'm just too skewed because I'm in the Northeast. And there was a lot of people have had problems where prices have come down, but the supply is just not there. And even though I'm worried about the economy and such, it's just if the group was expensive like it was, or if even the group was fairly valued, or even just slightly expensive, then I'd be saying, oh no, I understand interest rates are high, but everything's relative. That's why the whole broad market, it's like, yeah, it's come down a lot, but it's still expensive. Okay. Yeah, the housing stocks have rallied a lot, but they're still cheap. Okay, now, but they're just overbought. Let's let them come in a little bit, and then we can go back into them. So it's just a little button here flying around. In the winter, you don't see that too often. Anyway, so that's really that's a group that I'm worried about on a near-term basis. The one thing I do have to say is I do have to run out. It's my father's 93rd birthday. And my brother is with him right now, visiting him, and he's going to do a Zoom call. We all talk to him. Believe me, the guy at 93, he is as sharp as a tack. He's as smart as he ever was. But I'm going to go home and give myself some time to get home. So we'll wrap things up here, Rodrigo, in the next 5 minutes or so. But it's a great day for my family, so I want to be able to enjoy that and have my kids there when we do the Zoom call, so that he can see his grandchildren and of course my siblings' grandchildren as well. But that should be a lot of fun. But
right, so in the next, I guess, 5 to 10 minutes, Matt, if you can give us closing remarks on the markets, why the folks should join the chat room, and then once after that, I will show them the live room. I'll have the Q&A open for the folks. I'll show them how the chat room works for all the people that joined, just to show them the platform and all that stuff. So let's go, Matt.
Sounds good. Yeah, just one of the things we started with, and I think is just so important, and that's don't trade alone. Trading alone is so hard. investing, when you that long-term investing, and usually use a broker for that, and they're good with that, and they're helpful. But if like I said, I mean, you're talking about Paul Tudor Jones and he has traders, and they are talking to each other all day long, and they're talking to other traders on the street all day long, and you name any top hedge fund, all of their traders are talking to dozens of people every day, and including people on their team. And of course, they're talking to portfolio managers and such, but they're talking to traders around the street. Why wouldn't you want to do the same thing? It's just so tough to do on your own, and to see things. Not only that, there's only so many opportunities. I don't care how God could come down and say, you're gonna win on 80% of your trades. I'm just going to ensure that from now on for the rest of your life. Well, guess what? All right. If you're working with a group, you're going to get more ideas. So that 80% is going to be a bigger number because you're going to have people in a chat room saying, have you looked at this? Oh, as an individual, there's only so many things you can look at, so many opportunities. Okay. And then the stuff you see on the financial news is usually after, big move has taken place. No, when I was talking about the oil stocks in October of 2020, I was talking to them like, what are you crazy? And sure enough, 4 months later, everybody else jumped on the bandwagon, and that's great. And Morgan Stanley was saying we were really smart. Our stocks were up 50% this year. Great, we were up 120% in that group. Okay, so that was in 2021, the next year. But it was, in other words, we had bought it in 2020, and those 4 months that they missed half the move, more than half the move. So even though they had a great year in 2021 in the energy stocks, we had a much better one because we got in early. But if you're not seeing that or hearing these things all the time, you're not going to be able to. You're just not going to be able to. So don't trade alone. That's if there's anything that I can say, that if you're not trading in our chat room, that's fine. Find a group of people that you can talk to, because it's going to be very, very helpful. But the other thing is, of course, is the risk management thing. But more than anything else, the market. We've had this nice rally. We've seen bear market rallies before. That's what I think it is. But even if it's not, even if this is the end, if it's the end of the bear market and the new bull market, it's going to be very, very volatile. There's too many, and we all knew that. It happened in 2010, 2011. It happened in 2003, 2004. The market saw huge gains, but they still saw wild swings in both directions, because people are never completely sure if the worst is actually behind us. It did work fine in the late 1990s. It did work fine in most of 2020 and all of 2021, because the Fed and other central banks in both cases had the pedal to the metal with liquidity. That's not what usually happens, and they're not going back to that. And if they do go back to that, well, then we can play it that way. But if they do go back to it, that means something's going to break. And believe me, the market will be a lot lower when that happens, and you want to be able to take advantage of it. So, the active trading is a tough game, but it's a lot of fun, and we have a lot of fun with each other too. Busting each other's chops at times, and then have a lot of fun and talking about sports or movies or TV shows, whatever. I mean, but it's mostly business, and we take it very seriously. And we had a great year last year. We're doing well this year. I think it's going to be another great year. And good luck to everybody. Tomorrow's going to be a big day, because I'll just tell you, whereas Apple's trading down about almost 2%, a little less than that. So it's not a disaster. So it is down, but that's really it. So again, thanks a lot for joining us here. For those who have joined us in the chat room, good luck. We'll see you tomorrow, and good luck to everybody. It's going to be another exciting year, and I do have to leave with one last comment, though. The one reason why people should buy, and I live up here in Boston, buy at least a few puts on the market is, of course, everybody knows Tom Brady's retiring. The bull market since Tom Brady started playing has been unbelievable. Every time he wins a Super Bowl, the market takes off that year. Every time, the 3 times he's lost the Super Bowl, it's been horrible for the market. He can't win Super Bowls anymore. He's out. He's retired. This is probably the end of the stock. The stock market's probably going to zero by the Super Bowl next week. Obviously, I'm joking, but that's kind of that's kind of a corny thing. But we have fun stuff with that. But and there's people in New York probably saying we hate your guts. But anyway, in all seriousness, it's going to be a very volatile year. We take it very seriously. We're going to have a lot of fun, but we're going to make some profits, a lot of profits, trading this in both directions. And I hope you'll join us. Think about joining us because it's worked out really well since inception. I think we'll continue in the future. Thanks a lot, and thank you, Rodrigo. And I'll now say see my father, and we'll talk to you all soon.
All right, Matt Maley, Chief Market Strategist. Thanks a lot, folks. That was Matt. I'm showing you right now the live room, right? And this is for everybody that's signed up. This is basically what you need to look for. If you're just trying to, see how the chat room is, you can also, stick around and watch. We're going to be looking at some of Matt's trades. All right, that's a lot of love from you guys. Robert, what's up, Donald? Skin Plus, D Davis, T Parry, Johnny Sebastian, Bond Ford, Liu, CJ, Lloyd Street. Yes, no, it was definitely a great session. It's always like that with Matt. He's a very interesting mind to pick, right? And just to kind of show you guys really what this is, what you're getting here. Remember, this is the main chat room, right? So you have a couple channels here. The inner circle chat, and these are sound alerts, right, that you can put on and off. And these are, how do I put this? These are sound alerts, right? So if you have your window open like this, right, you can take them on and off. But this is, remember, looking at it from a laptop. You can have this on your phone. You can have the app Benzinga downloaded, log in with your credentials, and you're going to get a push notification every time that Matt is posting an entry or an exit. So as an example, whenever he sold those Rivian puts right there on Friday for 100% profit, he was literally telling you, I'm going to take a profit on some of them and let the rest run for a while. You could have been making yourself a sandwich. You get that alert, clock in 100%, eat that sandwich like a king. Then below, okay, remember he told you to leave some. We were talking about risk management earlier in the session and how to properly book profits, right? Well, the remainder of those puts, he sold them. And again, this is all here live, posted with a timestamp. But if you get the push notifications, it comes out as a mobile alert, right? So Rivian puts $19, 180%. He showed you different trades like this. So you would get those alerts on your phone, anywhere that you are, in the office, at work, driving, eating, in the kitchen, anything that you're doing, right? You get those alerts. And that is the most reliable type of alert. We've tried, it's just the most reliable one, those push notifications on your phone. So you would have gotten those notifications as well as when he was buying them, okay? Every single trade, as you can see, has a symbol, expiration date, strike price, and of course, if it's a put or a call. So everything is pretty straightforward. This is the most simple type of way, like the most simple type of way, simplest type of way that you can trade options. Buying a call, buying a put, it's nothing more than that. We don't do, in Matt Maley's chat room, in his live room, we don't do like credit put spreads or iron condors or butterflies. This is what you would call volatility trading, right? You're trading, you're a directional trader. You're trying to catch the move. And many of these calls and puts, we're really not trying to hold them for more than a couple of days. So for the folks, yes, in the Zoom chat, that's where you can find the link. So this is Matt's important messages. You can have it pulled up like this. You can have it on your phone, on a browser, or you can just have your app in the phone. You're logged in, and then you just get the alert, right? A lot of people do like to hang out in the chat room, and I'll show you why. There's 94 people right now in this chat room, 94. So I'm not sure what they're doing. Very likely they're just going over through the day. So for people that are learning, they love to just watch the interaction, right? Imagine if you're trying to learn a new language, the best way to learn that is by listening to other people talking that language. Similar concept here. Best way to learn here is to just get in the market right here with all these folks, and you'll see, you start learning things, and the dots will start connecting, and you will start having these aha moments. Soon, you're going to start improving faster than what you thought was possible for your case. Because if you're in a community like this, you are going to learn. You're going to learn, you're going to trade. You will be a better trader once you take this session. So we have all these things like risk management. The meeting, Jeremy, is on Tuesdays, 11:30 till 12:30. So that's a live session that Matt Maley does with his chat members. It's for about 45 minutes to an hour. It's a full market update, full market analysis, trade adjustments as well, meaning, we're going to be taking some profits here. We're going to be adding, we're going to be adding on the other side now. So it's very important, if possible, to attend these sessions. And if for any reason you cannot attend the session, don't worry, because it's going to be uploaded. So you will have the recording. You just have to, basically, if you need the recording, you can do that. And again, this is perfect for new traders, because you don't have to do anything complicated like a spread or a butterfly. And this way you can really start looking at your trading as a career instead of a gambling machine, instead of a casino, right? Because it is a career. This is a workplace. There's 94 people here working, okay? Working, doing research, analyzing markets right now as we speak. This is live. There's 94 people there, okay? That's James Donahue. What's up, James? How you doing? James is a great member, by the way. So that's what I'm talking about, folks. Really take it seriously, because this is this could be your full-time thing, right? If it's not already. And we have people that have full-time jobs, part-time jobs, trading part-time. The push notifications come in key in this particular case, because many people, if they're working, maybe they can't have the chat room open at all times. So they always have that backup, push notification alert that comes out. So that's pretty important, folks. Don't treat this like a casino, because it's not. You want this to be a career. You need to treat it seriously, just like that, right? Not a hobby, something that you can make some serious income or part-time income, depending on really what you're trying to do, right? Don't trade alone. Matt went over this plenty of times. Don't trade alone. It's not ideal. If the pro hedge fund guys don't do it, I'm sorry, the pro hedge fund guys, right, don't trade alone. They have a huge brokerage of people, right? Hundreds of people, traders talking. Why should you trade alone? It makes no sense. So any community that you find, personally, I think this is an amazing community. Matt is a great instructor, great trader. He's an analyst as well. So he understands Wall Street pretty well. That's the most important thing, having a teacher that has done it and is good at teaching for it, right? So you have both of those things with Matt. And just don't follow the crowd. Remember, if you don't have any education in trading, you're going to fall into emotional trading, like it or not. That's just, like the fight or flight mode. So having an education on trading, on how to do this with Matt, Assyrian, since we opened the chat room, I believe it's been, since we opened it. So I launched it with Matt in April 2020, not in April, around that time in 2021. Since the chat room's open, it's up over 300%. And we're not going all in on any trades. We're not doing that. We don't do that. We don't recommend that. We want people to, like, for example, Matt even said it. He puts no more than 5 or 10% on each of these positions that he takes, right? No more. We're talking max, right? Does that answer your question, Asari? So yeah, the education is basically built into the trades, and of course during the sessions. And this is stuff that he uses. He doesn't overcomplicate himself. Matt's been around the block for a while, so you can see his charts are not really that crowded. Like most people will have, some crazy 5-year-old drawing looking like chart. Matt's has clean charts. So remember, Matt is your guy, right? And again, this is really for you. The whole point of this is to make you money, quite simply, right? That's the whole goal, to create income for yourself. Part-time income, full-time income, that's up to you. But that's the whole goal, right? For you to be able to make money from these chat rooms, be part of the community, become a better trader, and take advantage of it, right? Take advantage of Matt, having him there. So it's basically, investing in yourself, quite honestly, right? You're not buying a car. This is something for you to help you make money. I think David on the chat, David on the Zoom, on the YouTube place said he started with 26 grand. Obviously, not everybody starts with 26 grand, but David says he started with 26 grand, made it like, I don't know if it was 34 or 36, I don't remember. Let me find the comment there. Yeah, from 26 grand to 34K. So that's great, David. I'm glad that you've been able to, you know, squeeze the juice from Matt Maley. You've literally been there for 3 weeks. 3 weeks, David. Okay. So that just goes to show you guys that, and there's tons of other cases, you know, like I've signed up hundreds of people in this chat room. Does everybody like to come out and kind of, you know, talk about their win rate? Quite honestly, not always, right? But I mean, thanks, David, for sharing your personal experience here with the chat room. So if you're trading alone, basically what you're doing is that you're vacuum trading. You're doing everything on your own with no feedback. It's just you bouncing off ideas. And quite honestly, that's why the community helps a lot. When you go out hunting, when we used to go out hunting, right? You go in packs. You don't go individually trying to take down, you know, a huge elephant, right? You go in a pack of 12 or something. So it's always better to do these things like that from the beginning of time, right? So this way, instead of trying to learn, we saw in the poll, we did like 45% of the people watching the session today have blown up their account. These are the things that we try to avoid, right? This is why we want you to learn and earn by being in Matt's chat room with an options professional, instead of learning by blowing up your account, because you can only take so many hits on that until you can't, you know what I mean? So it happens, and we don't want it to happen. And that's really why Matt's here. These brokerages let you trade, you know, hundreds of thousands of dollars with no education, no nothing. And now, you know, Hot Rod here has to come and clean up the mess and give you guys, you know, this chat room, which makes a huge difference in what you guys are going to be doing trading, not just for the education, but for the trades, right? So don't wing it. That's going to be what I really want you guys to know. Don't try to wing it. That's why most traders will fail, really, because they try to figure it out or wing it. And there's a lot more to it than just clicking buying and selling. And everybody here in this chat room, for you guys to know, is a full verified human being, okay? We don't have bots. We don't have fake accounts like Reddit or Wall Street Bets or StockTwits or any of the, like a Discord, any of these cheap chat rooms. These chat rooms were developed internally here, which I have to give a shout out, of course, to Vin and Tammy on the development team. So help me give them a shout out there. So they also John G, also big shout out to John G. So basically they've been helping build this chat room, and I'm telling you, it's come a long way. When I launched this, it did not look like this at all. So there's been several platform upgrades. This that I'm showing you, that I'm going to show you in a bit, is the dashboard, where you can get the trades from Matt. That, remember, there's 6 emails that you'll get per month, which are stock swing trades. Those are stocks, not options. Those are going to be sent to you by email. And you can find them here. Starter and enhanced. You also have an agenda where you can filter out the events. You can see what's going on. There's guidance in a bunch of companies. Okay. But you can see Packer doing a stock split. There's always numbers coming out. Imports, exports, full employment change, unemployment rate. These numbers are constant. Don't think they're going to go away. We're always going to have CPI numbers. We're always going to have jobs numbers. We're always going to have a JOLTS. We're always going to have a PPI. Like this stuff is always happening. Building permits. Like these events don't go away. So you really need to learn them. You need to figure them out. You need to know when they're happening. Retail sales, like they come all the time, monthly, quarter over quarter, year over year. So these things impact different sectors, and you need to be aware of this if you're trading. So this is why the agenda is really good. You do have charts there. These are some sessions there. You also have some scanners that are custom built for you. You really won't find these scanners in other spots because they're built for you guys. So this is Why Is It Moving? We do have a team of people, including Randy. So everybody in the chat, give a shout out to Randy. All right, so Basically, they're scanning the markets, they're scanning price action, stocks, and pieces of news. So as an example here, Amazon shares are trading lower after, why? Your first question is, why is it trading lower? Well, it's telling you exactly right here. It's trading lower after the company reported worse than expected fourth quarter EPS and issued first quarter revenue guidance with a midpoint below estimates. For Amazon to report that, it's not too bullish. But you look at, I mean, Alphabet also. I mean, you have pretty much the majority of the Qs here. So, yeah, this is very important. And this is, because these stocks had the earnings today, but tomorrow it's obviously always changing, constantly changing. This is included in what you're getting here today, right? These are other pieces of news. This is another news scanner. It's already filtered for you, just like this one's already filtered for you. You do have top gainers, top losers. If you do like to find, just kind of get a sense of what's happening out there. Blue hat, there's always something going on with this. You can add stocks. Let's see. All right, so this is really good. So you can add stocks here. And by the way, there's a lot more that's coming into this. I was talking to Vin, and he's got some like really interesting upgrades that he's going to be doing here, where you can basically do research on stocks inside the platform. So there's a lot of stuff. There's stuff I can't even talk about, but yeah, there's a lot of stuff coming your way. As far as like improvements on this platform, on the plus side and things like that. So let's say AMBO, I have some watch lists that I've already created in my portfolio here. So you have Qs, I have 10-6 swing trades. I mean, I've always been, Kathy Woods. I was trying to trade fertilizers one time with the shortage. So yeah, you can add them to your watch list, and those are your alerts. That's what you're looking at. You can pretty much add them right here. The top gainers or the top losers. I don't really, I know this one. This is like an EV. But it's like from Indonesia or something. So you can see all of that, folks. This is a lot of information, I know, but trust me, this is, being a successful trader is not a walk in the park. I'm not going to tell you that. I have to be realistic. But the thing is that you can be successful and you can do it. And that's what I want. I want you guys to make a ton of money in the chat room. And that's why we're trying to improve the experience, give you guys as much as we can to make it a pleasant experience, not just to be in the platform, but to also be in the community, talking with Matt the entire day with the other members in the inner circle chat. You can see that a lot of people are, let's see how many. There's 93 people still, they're just hanging in the chat room. They're probably reading stuff from the top, just kind of getting research, taking notes. As you can see, there's always people are posting, news articles, things that are happening. So you're always on top of what's going on. You have hundreds of people here that are helping you out. Rafat, send me a quick email because it might be something different what you would need to get, but just make sure to send over the email. And yes, this is until midnight, Jeremy, that's correct. So, well, I was talking about the 6 email trade alerts per month. So this is, for example, it's going to come in these two, right? Starter and enhanced, right? So you're going to see that some of these trades, they're going to appear right there. And those come out one every 2 weeks. And this one, the enhanced, comes once per week. You can see all the trades are there for you, right? You have a chart upgrade. And now the most important thing for me really is to make sure that you download the app and log in with your credentials so that you can actually have those push notifications. That's going to be key for you to be able to replicate Matt's success in the chat room. And you don't have to do technical analysis. You don't have to be listening to calls. And you can do that if you want and have the time, but Matt's already doing that for you. He's already reading the transcripts of all these earnings calls. He's a chief market strategist. You know what he does? They sell research to investment firms that pay millions of dollars just to see what Matt's opinion is on certain sectors with a certain time outlook. You today, folks, including myself, we all got a free sample, basically, of Matt Maley's perspective on the markets and how we can profit with some of those ideas, right? Of course, you're not paying millions of dollars, right? But you're basically going to get Matt the entire day, and you're getting Matt for the trading side of things. So imagine if you were to actually be getting, which you are, getting that type of research, right? That institutional level research, you get that. And on top of that, you get real-time trade alerts from this guy, from Matt Maley, chief market strategist, 40 years in the game. That's something that I would highly consider if I were you. Even if you're new or advanced, because we do, I mean, these trades, it doesn't matter if you have a small account, a big account, contracts we're buying are honestly like, I mean, $22 puts on TQQQ, you buy the ones that expire this week. Those, I mean, we're talking about $1 or less, you know, per lot there. So you're not buying huge like calls, like, and the reason it actually helps us because we can manage the trade better. As you can see, Matt, when he was, where is it? So he sold part of those puts for 100%. And then later in the day, he sold he sold some more for 180%. So it's easier to manage a position. If you would only had one big call that cost you a lot of money, maybe you would have just gotten out at 100, right? I mean, which is fine. I'm not saying it's not, you know, but being able to manage the trade with smaller contracts really does help you out as a trader. If you guys didn't know, like I'm not a reporter, I'm not a journalist, I'm a finance background person, and I'm a trader, and I've been trading for about 4 years. And I can tell you that Matt Maley knows this stuff. He's on point with all this ever since I've been following him for like 3 years now, 2-3 years, and he's always on point with the stuff. He's a very smart dude. You can learn a lot from him. So there's also a lot of education involved. And keep in mind, you know, education is really like a lifelong process. If you haven't been doing well, and look, when we saw the poll, a lot of people have blown up their account. It happens. Sometimes we do just have to put the ego aside and realize that, you know, we need help, just like anything else, right? If you want to become a professional basketball player, tennis player, soccer player, whatever, you get a coach, you get somebody to help you, right? If you want to become a lawyer or a doctor, you go to school and you learn from a teacher, from an instructor, right? So it's the normal process, right? And it's something that I think everybody should do. Everybody should get an instructor. Even the biggest professionals, biggest athletes, they all have lifelong coaches. Everybody, from Mike Tyson to Messi, all those guys. And yes, so Michael, it would renew at the same price next year. It's not going to change. You can either do the annual or the lifetime, but yes, I think at this point we've covered a lot. We covered all of the well, most of the questions, if not all of the questions about the live room. And I do have to give a quick shout out here. Okay, so we have a new member here. And as you know, it's tradition that we have to welcome a member accordingly. So JX45, welcome here to the family. Let's go. All right. Yes, yeah, so we have annual. So the annual or the lifetime, whichever one works for you. And man, it feels like I'm running a radio show here with all these air horns. So yeah, it's basically annual Asarian, and when it renews next year, it's basically going to renew at the same price. It's not going to change. It's always going to be the same. That's unless you do the lifetime. And the session on Tuesday, you're going to get an email for that. And in that email, it's going to have the link to sign up, right? So again, right now there's 93 people. Anybody, of course, that signed up while we were live or, is signed up, they do have that access. So, all right, folks. So I think that covers this. If there's any other questions about the live room, about Matt Maley's trading style, this is last call for questions. Before we do wrap this up, it has been a great session. I'm going to tell you guys, really, it's been a great session. A lot of education, getting to know you guys. I mean, you guys were probably shocked by the poll results, and maybe it could be eye-opening for some of you guys. But yeah, this is a great thing. I think all of you guys should try it, especially if you're new to trading. And with that, folks, I think we kind of, all right, Baleari, about the SPY call today. Yeah, so what Matt trades is the NASDAQ through these inverse and normal. So basically through triple leverage ETFs, right? So through the T or the SQs. but that's basically what, buying calls or puts on those. So, all right, folks, big shout out to all you guys. Rafa, okay, I'm gonna put the contact there. So if any of you guys have questions, feel free to reach out, send an email. We'll be here. And shout out to all you guys for being in this session today. It was a good one. For the people that joined, please make sure to check your email for where to go once you sign up, finish creating your account. If you have questions, send an email or call, it's fine. And RM, the chat members will have a recording of everything. So all right, let's go to the YouTube chat here. I guess I missed it for a bit here. Mark, what's going on? Yes, we have people from New England here. Okay, David, you've been doing pretty good, man. All right, I'm gonna check your email, David. And all right, folks, thanks a lot for being here. I just want to check in, make sure everybody has all the questions are addressed. If you have more questions, send an email or call. Big shout out to all you guys. David, congratulations on those killing wins that you've been getting there in the chat room with Matt. Good to hear that. And if there's any new members there, again, the community is great. People help each other out. It's definitely something different. I'm 1,000,000% sure you've not seen a chat room of this caliber. Not like this one. So folks, we'll see you soon. Thanks a lot for being here. Shout out to all you guys. Happy trading, and we'll see y'all tomorrow in the chat room. All right, folks.